Ladies and gentlemen, I'm here trying to rush to change my thumbnail because, boy, oh boy, I mean, did we end up touching the bottom here? Look at the heat map today. This was all just in the matter of the last, 20 minutes or so. We've just completely bottomed out and now starting to turn around. Even names like BMNR, for example, which were not doing so hot, ended up going down to 24.33 and bouncing back up to $26. Okay, we take a look at a name like Nvidia, bottoming out at 172.94, headed back up to 180. Now, this is why we buy constantly. We don't know when there's going to be a bottom, and maybe a bunch of people are going to say this is a dead cat bounce, and you could be 100% correct. I'm not even trying to make, a decision whether or not that's the case. But if I just continuously buy into this market on the way down, yes, not all of my buys are going to be exceptional purchases. Really, only one of them will be, and all the other ones will be red until we end up reversing. But I liked this stock, Nvidia particularly, north of 200. If we take a look and we see this massive sell-off, or, we see a lot of people in Palantir, for example, this is another one, 153. If you like this stock at 190, you're going to love it under 150 at the 147s and even up. Okay. So keep that in mind. Another thing to keep in mind that I wanted to talk about is where we've come from this year. We're going to discuss that as well. Just how much of an unbelievable year that we've had. Obviously, in select few names, you can look to the, trade desks or Duolingos or UNHs or PayPals or something like this and say, hey, it's just been red constantly. Well, some of that is execution, right? A lot of those companies have actually made real mistakes. They're fundamentally hurting. And so, of course, their stocks are going to be, replying to some of that actual hurt to their fundamentals or expectations of growth. But for certain names, and still, like we can take a look here, the names that are still running the market is what you would expect. I mean, honestly, year to date on Opendoor, IREN, Oklo, BMNR, Bloom Energy, Nebius, Hood, all of these companies are still having insane year to date returns. Now, and this is adjusted for today, by the way. So it's all going to be updated. If we take a look here, one sec, let me just lock this into place. If we take a look at even a Shopify or a Nvidia is still up 30%, okay, to 179, which I actually think it's just slightly above right now, but it's not updating as fast on the Google Finance side. So for a lot of these stocks, we're still in very good positions. Of course, you could have traded better. You could have sold at the top and rebought at the bottom. Wow, wouldn't have that been fantastic? I think the idea is that some people were calling, and maybe it still comes to fruition. I don't know, but I'm not even sure that these investors would be right, or in their trading strategy, even if it did come true. For example, SoFi continued to fall, now down, or at one point today, to 23.52, then bouncing off that, starting to climb back. But there were a bunch of people, if you guys were here yesterday, calling for $18. I'll buy back in whenever it's 18. That's the next bottom. This is the technical analysis that I'm seeing, yada, yada, yada. Okay, cool. Whenever it does get to 18, are you actually going to end up buying, or is there going to be some new signal that actually points to 16, 15, 14, etc.? So we'll see. We will see. Is Josh Brown on CNBC? We can pop over to that. I don't mind. Is he saying we're bouncing, or we've got much more pain ahead? Let's take a look.
The energy health back correction
whenever you got on.
See major upside until next year or the end of December. Now,
yesterday's action, Josh, I'm going to come over to you. Obviously, we saw a big reversal in the markets following Nvidia earnings. Today, we're higher after those comments from Williams. Does the action yesterday, does it matter for today? Does it matter going forward for the rest of this year?
Look, I think it's really healthy in a bull market to have these moments of extreme doubt and uncertainty. I think it's great. You get a VIX spike to 25. It shakes people out of some trades that maybe they didn't belong in to begin with, or they were too heavy. It makes people second guess some of the more speculative things that they've been doing. And if you want this bull run to continue, you want those moments to happen every once in a while, because it stops us from building these types of parabolic charts and outrageous expectations for returns that put people in a really bad position for the eventual corrections. We really haven't had a meaningful correction since April, but we have had these moments like yesterday. We had one in the middle of October. Some people probably remember. And overall, I really just don't view it as the end of the world. I agree with almost everything that Steve just said. But I have a slightly different point of view on the mega caps. I think they are going to lead us into year end if we get that sort of like melt up environment, which we've seen in recent years. And I think these are the stocks that are going to be at the forefront once again. And I know a lot of people want to change a narrative, and they want to believe like the energy healthcare component of the market has legs, and that could lead us for another few months. I'm just thinking about like the discounts in these shares right now relative to where they were just recently. And I think if people are bullish, that's where they're going to go. Like I'm looking at Meta in a 26% drawdown. I know they're going to buy it. I'm looking at Tesla in a 19% drawdown. You know they're going to do it. It's going to aggravate everybody, but they're going to do it anyway. Nvidia in a 16%. Amazon, Microsoft, both 15% off their highs. I can't escape the feeling that it'll be second verse, same as the first, and they're going to go right back to those names. You have the most liquidity, you have the most familiarity, and you have people that, for whatever reason, maybe they weren't in some of those on the way up in the first half of the year, and they're just going to go to what they know. And so I'm a little bit more constructive in that part of the market than maybe Weiss is, but I agree with the rest of what he said.
Yeah, I am constructing that part of the market. I haven't sold anything, as I said. It's just a time where I think you and I may differ. But I'd love to see what you say to come to fruition.
All right, Siege, go ahead, jump in.
Yeah, I mean, I think we all have to appreciate how frothy the markets got in September and October. And we may have pulled forward the Santa Claus rally, made it a little earlier. And you obviously had some liquidity scares. You had some deleveraging scares. And there was this Molotov cocktail that was thrown at the market. And yet we're still only off 5% from the highs. And really where we saw the biggest shakeout is in some of the more speculative names. And, you know, from my lens, that's a healthy thing. The key is making sure you're in a position and you have a healthy athletic stance with enough cash to meet liquidity needs, buy into weakness, and not be over levered. And it's clear that margin balances had built a lot. And so there was embedded speculation in this market. I do think you could see volatility continue a little bit. There was a life preserver thrown this morning by Williams, no question, with a with a kind of dovish stance.
I think it was a whole rowboat.
It was a whole rowboat. But you have to look at this as a valuation and positioning recalibration, which is almost necessary, which makes us think that this is going to be a shallower correction versus the deeper ones that you would typically get with a growth scare that would come from EPS cuts or cuts to GDP next year. I don't think you're going to see that just yet. Again, you might have to have some more deleveraging here in the very short run, but I think a little more intermediate term, you're going to focus on those things. One more thing that I'd say, it's not like we're off to the races again, though, because we still have some pretty huge embedded earnings expectations in the markets for 26 and some pretty ambitious targets, right? Okay. So that valuation's high.
Second, but very quickly, you just agree with Josh when you said tech's going to carry us the rest of the way. So if it's not off to the races, how does tech do that?
Well, no, I think the companies, you have a bifurcation within tech. You got to look at it as K-shaped. You have the haves and have-nots. Look at the valuations on some of these names. They've come in quite dramatically,
you got
right?
Some reporting next week. Which one of those would you say are on the bottom of the K or the top of the K?
So, listen, I think the best positioned companies in the Mag 7 are the ones that we are most overweight. It's Google, it's Microsoft, it's Meta. Google is our largest overweight by far. followed by Meta second. There's some digestion issues in Meta. They have to prove that their spending's making sense from an AI standpoint, that they're able to monetize the AI. But when you have the eyeballs they have, once they get focused on it, I think they're going to be huge beneficiaries.
Kev, I want to come over to you. You and I, we were having a conversation before the show, if you don't mind me kind of bringing it into the show about
really quick. We can get back to that if you guys want, but yeah, stocks are reversing right now. It is quite exciting, and he is right. Like, whenever we look at what is causing this, it's mainly fears of nothing actually coming to fruition. People worried about a lack of rate cut, which we've seen no evidence of. I mean, they've been talking about whether or not are going to or not going to cut rates in the last few months. We've seen a September cut, an October cut, and many of the Fed members come out and say, hey, you know what? It is probably likely that we are going to do another cut. Maybe it's not majority just yet, but those are just public comments right now. I think that a cut is needed, especially whenever you look at the unemployment rate, which I think will be the most important mandate, especially in an AI world where everyone is worried about whether or not this next technology is going to take their jobs or not. But that being said, and by the way, I am unemployed, but not really. I'm self-employed, but I'm not actually in the statistic. That's only people that want jobs. I'm not looking for a job. Okay. But Tanner unemployed. Yeah, you're going to see me here at noon a lot more often. But that was from not this October, but last October. I've been not working for a little bit, if you want to call it that. Okay. Let's see. So, I was just wanting to comment on one of the things that guy just said. Oh, sorry. The EPS beats have been very real this quarter. And over the last couple of quarters, we've seen 80+% beats across the S&P 500. That's very real. You know, the guidance increases that we've seen almost across the board, but especially in the big names like he mentioned, in the Googles, in the Microsofts, in the Amazons, in the Nvidias, massive guidance increase. That is insanely important. Okay, so yeah, I'm very much on the bull train. I'm buying every single one of these dips. I'm trying to do it as much of a DCA, a daily DCA, by the way, because whenever it falls this fast, it can't last very long. Okay, that's in my experience. We can have these slow bleed offs that just kill the fatigue of retail, but what we've really seen, and I honestly think it comes about with the speed and frequency of trading, with the zero commission trading. In the last 10 years or so, as we've sort of adopted these new technologies, I find the crashes and recoveries happen much faster. They're much tighter. The access to information is much faster. So you really get to see everything happen all at once. And although it might feel like things have been bad over the course of, oh, sorry, I was looking for 3 months, not 3 minute. Over the course of the last little bit in SoFi, that's not the greatest example. Maybe a Hood or something like this, or maybe a Palantir might show off a little bit more of a longer term bleed off. But honestly, this is still not that bad. From Palantir being over $200 on November 3rd to now November 21st, you're at 154. Trying to push for some recovery. Obviously, we've seen some green candles and some, bounces along that way down. But really, it's going to come to whether or not there is a Fed rate cut, which is going to help. And then if there's no, external disasters, like potentially what's happening with Japan's bonds and stuff like this. From what I checked, let's see. Japanese 30-year treasury notes. Let me back that way up. Yeah, I mean, it being down a little bit is also pretty helpful as well. But who knows? I mean, there's a whole lot of speculation. Some people thinking that this comes down to Trump's tweets and the Epstein files, because many of the donors and the people who maybe have started a lot of these businesses might be in those notes. Like, who knows? Maybe some hedge fund guys We already saw what happened with the Apollo management guy that just sort of fled. But anyway, that maybe could be leading to some of this bleed off, but there still is a lot of, let's say, non-guilty money that is looking to invest in stocks, and that's where you're going to see some of this recovery. Target's up 6%, Intuit up 5.75%, Shift4 up 5.75%, still under $70, but has actually handled some of this sell-off in the last little bit decently well, because we've kind of already did that sell-off much earlier than many of these other companies, sort of starting in July, that strong bleed off since the CEO, Jared Isaacman, ended up taking the nomination to become the next head of NASA. Then that happened, and then it didn't happen, then it's happening again. But yeah. BM&R, we have a lot to discuss on BM&R. We ended up seeing earnings, but it was extremely weird, going all the way back to August, and then the share count didn't make any sense. Like, we are wanting to see updated share counts, okay? It was very weird. They also announced a tiny dividend. By the way, uninstall Moomoo if you have it. They just continue to switch to stocks that no one cares about, and I'm not touching a thing. So if you guys have Moomoo, make sure you uninstall it, and yeah, fix your product. Okay. But BM&R also announced a very tiny dividend, 1 cent of an annual dividend. And honestly, that's just to enhance the amount of customers that could end up buying into the stock. That's the way that I see it. Okay. It's not that they care about the dividend. It's that there are some funds out there that potentially, or hedge funds with objectives, which means, you know, you've told your investors that you are going to buy into these certain stocks. Sometimes that's profitable stocks. Sometimes that's US stocks. Sometimes that's dividend stocks. Sometimes that's growth at all costs, what have you. But if it doesn't have a dividend, can't go in the fund. A very 1 cent dividend, very, very tiny, could open up to new potential investors. There was also talk of their new Maven staking aspirations. Made in America Validator Network, Maven. And it looks good, but there's really nothing there. Honestly, I was going to go live to talk about some of the things that we saw this morning, but we didn't really see anything. So they are looking into staking. They did issue a 1 cent dividend, which is going to be, no investors are going to care about it, and it's not going to make a difference to their balance sheet. We'll see. We will see. Am I accidentally clicking the space bar? Nope, I'm smashing the space bar and nothing's happening. Nothing. Okay. Tesla, 400 again. Going all the way down to 383. Who ended up getting anywhere near these bottoms, by the way? Who was buying around 11 a.m.? SPY bounced off 650, climbing back up above 660. Let's check the Qs. Qs are green, up 0.9%, bouncing off 580, back up to 590. Let's check IWM, see what the Russell 2000's up to. Once again, bounced at around 1040-ish. Headed back up 2 point. Wow, what the? Whoa. The IWM is up 2.8%. 2.8%. That is crazy. Okay. Adobe's up 3%. Carvana's up 3.5%. Workday's up 3.5%. Upstart's up 3.5%. Companies are up. There is a straight reversal going on. It can't be understated. Let's go back to the heat map really quick. Software infrastructure's turned red. Everything else very green. Credit services up 2.5%. Asset management up 2%. Drug manufacturers up 2.2%. Wow. Restaurants up 3%. That's interesting. Maybe that is why names like Toast, names like Shift 4 might also be up on the day. Is that exact reason? That's kind of interesting. And Open Door up 10%. Okay, let's go ahead and take a look at Zeta. I like this. T. Nelly says, stop talking about these minute-to-minute moves. Look at what happened yesterday. I cover, the stocks every single day. So we did talk about what happened yesterday. Honestly, if you guys don't know my stance on how I feel about the markets, I'm a long-term shareholder, okay? I look for discounts to buy into stocks, but I'm not looking to sell anything right now. Okay. I'm not taking leverage. I'm not pulling out margin to take advantage of these dips. I'm not calling for certain bottoms. I'm not doing technical analysis. We are covering what's moving in the markets, the stocks that I really love, and fundamental breakdowns of those companies and what's happening in the news. So I get it. I'm fully aware. And we might not have bottomed. But let's enjoy a little bit of green whenever we see it. If you're still red holding on to 8Co holdings and these sort of names, time to drop that. VIX, by the way, falling 2440, which is still, that is historically high, but is falling a lot on the day. Okay. I would rotate into quality. Anyone that questions whether or not Nvidia is overvalued can have a word with me. And yeah, honestly, I was taking a look here. I'll show you this really quick. I was taking a look at a couple things. Right now, I'm looking at PE over the last quarter or so on Nvidia, right? We're sitting at 43.7 times. That's not adjusted for, the move of today. Okay. Oracle has fallen a lot, but that's just because of their insane sell-off. And if we end up going to forward PE really quick, what we end up seeing is that Amazon is actually the most expensive name at 29.3 times of this, sort of not Meg 7, but the big GPU spending names. If you guys want me to add in Tesla, I can, but it's not going to do this chart any favors. I could add in Apple. Okay. That one might look fine. Makes it the most expensive name on the list, however. And then everyone goes, oh, no, that's the flight to safety. Really? Okay. And then I could add in Tesla, but it's going to completely change the list. All of them are back down here. Tesla's up here. So if you do believe in the narrative, hey, I think that even that could be very cheap for where you are about to, the business that you're about to get into with robotics and all of these things. The opportunity is absolutely massive. But really, I would like to buy into the growth and the hype of Nvidia, but also accept that we are trading pretty cheaply on today's valuations. So if we count from the bottom, and then if you guys watch this channel a lot, tell me, which of these stocks do I buy? Which one of these companies have I been buying lately? Meta's forward PE at 19.7 times. This is 12 months out. By far the cheapest Mag 7 name. Then the next cheapest, who could have thought? Nvidia, 25.9 times. And that is, by the way, right now, not also talking about their consecutive countless beats on EPS. Okay? Google has skyrocketed in their forward PE, not because they are worsening in performance, but because people are really starting to value how good their performance has been. Okay, so that's at a 28 times. Then you sort of have them all lumped together here. Microsoft, Amazon, Oracle, all sort of in that 28, 29 range. And then Apple at the top. So you guys can take a look at this. But whenever, like, how cheap do you want Nvidia? What is acceptable where you say that the bubble is popping? Okay, let's imagine growth stops. Okay, growth stops. The build out only lasts 12 more months, and then we go into maintenance mode, which means essentially they're serving the exact same customers, and maybe revenue goes down to 8-9% year over year. Then we're still putting up what would next year's revenue be? Like nearly $80+ billion a quarter of replacing the current GPUs that we have with new ones, because they do have a lifespan. You know, it's technically a long consumable product. So that happens, but we haven't even seen that come to fruition yet. In fact, we grew, like just think about this for a second. Here, let me pull up my, let me pull up a spreadsheet really quick, because I don't think people realize what is happening at Nvidia. Like the people who are saying, no, $4 trillion is expensive. Like, give your head a shake. Honestly. Here, bear with me one second. We're just going to go, I'm going to make a couple charts big here. And then you guys tell me if I'm wrong. And I'm not exaggerating anything here. This is purely just what Nvidia says they are going to do next year. Okay? So I'm not here to exaggerate claims or say, oh, well, they're going to beat their expectations, which they always do. I'm just saying, you know, this is the exact number that they say that they are going to put out in the mid-range of their guidance. So, here, how can I do this? I'll just show you. I assume that all of you guys have seen Nvidia's earnings. How about that? It'll just save me some time. Okay. This is Nvidia's net quarterly revenue, where Q2 of 2026, and we got to drop the chat real quick. I'll put you guys back up in a second. In Q2 of 2026, which is actually Q2 of 2025. Okay, so a little confusing, but every other company shows off their calendar year. Nvidia reported at a different time, so they have a fiscal year. It's just a number. Okay, so this is Q2 of 2025. They ended up putting up $46.7 billion. That was at a growth rate of 55%. And then the bearish analysts came out and they said, yes, but this is going to slowly continue to drop down to 50%, then 45, then 40, then 35, then 30. And then they will be growing where the rest of the Mag 7 is. And Jensen said, nah, we're going to grow even faster. We're going to go back up to 65%, and we're going to put up $57 billion, making us one of the most profitable companies on just a revenue perspective. Not profit. We'll talk about profit here in a second. And it re-accelerated growth. Next quarter, this is what they're guiding for. They said, we're going to do $65 billion. $65 billion. We're going to accelerate growth even faster to 65.26%. And we are going to make sure that all these bearish analysts are our little B words. I'm going to not swear here, but they're all wrong. We're going to hold up this AI build out by ourselves. And not only that, we're going to do it at the best possible margin. Nvidia, this is what their gross margin is expected based on their estimates. Okay. Their estimates is that they bring out a 74.9% margin, which is going to bring in $48.7 billion next quarter. That's a re-acceleration because margin is expanding and growth rates are expanding. This is what Wall Street, every book, The Intelligent Investor, all the all those fancy books, okay, will tell you as companies mature, it's much harder to grow at those rates. It's hard to get all the suppliers together. Like you're relying on so much third-party risk and all of these things. It's just impossible to grow whenever you are, putting up some of the biggest numbers that the world's ever seen. Jensen said, nah, we're going to do it anyway. Okay. So yeah, they're expanding margin and growth rates. This has never been done before. This is the fastest growing company that the world's ever seen on an actual dollar basis. And people are putting it below the multiples for a forward PE basis of Microsoft, Amazon, Google, Tesla, really all of them but Meta. It's cheaper than Walmart. It's cheaper than Costco. It's getting down to cigarette companies. Like, we're talking nonsense here. And then people are telling me that this company is going to continuously sell off, or we're headed back to the 160s. We're headed back to the 150s. Give your head a shake. Okay. Nvidia's quarterly net income. This margin is expected to continue to expand quarter over quarter next quarter to 56.18%. And this is inclusive. I'm going to scream. This is inclusive of a $500 million. Am I getting that right? Other expense, which they're taking on next quarter. This is inclusive of them spending a lot more on research and development. This is inclusive of an increased tax rate to 17%, up from 16% and even lower the next quarter. And their margins are improving. Okay? $36.5 billion on an annualized rate, which, by the way, this quarter, Q3 of 2025 or, fiscal 2026, if you were to annualize that out, they'd be the most profitable company in the world. Okay, they're on track to be the number one most profitable company. It's not even about growth rate anymore. It's just like if they go to zero growth and just, maintain what we're doing now, we're a bigger company than Apple. Like, people are like, oh, no, everyone's got to have their iPhones. Everyone's got to have AI, and there's one supplier. I'm sorry. Like, it's crazy to me. It's absolutely crazy. Anyway. And that's if they don't end up putting up larger numbers the next year, larger numbers the next year after that, and then larger numbers the next year after that, which Wall Street is all saying is going to be the case. Essentially, it is consensus that over the next few years, Nvidia is going to be steadily putting up over $100 billion in revenue per quarter. They said they want to maintain that mid 70% mark gross margin all the way through next year. You don't think that they're going to these customers and saying, hey, you know what? You can no longer sign this deal for just this order because we have 1,000 customers that are wanting our GB300 NVL72s. So what I need from you is for you to sign a 2-year contract, a 3-year contract, a contract that actually says after the Blackwell chips, you're going to buy our Vera Rubin chips and you're not even going to get to see the specs. You're signing up today. And they're going, yes, Mr. Wong, I agree. Okay, you've done us well for Hopper. You've done us well for Grace Blackwell. Now you're going to do us well for Vera Rubin. And the market goes and tells me that I'm wrong on something on basic fundamental research here. Like, I'm talking revenue, gross margin, operating margin, down to net income margin. And that's not even talking about they're going to be the most profitable free cash flow business in the world because they're essentially extremely asset light because they don't need the foundries and they don't need the data centers. They are just the middleman. They're the tradesperson. They're the designer in between all of it. Their flexibility is insane. This market makes me want to pull my hair out. But I'm not writing leaps. I'm not writing options. I'm not, trying to increase my risk. I'm not taking out margin. I'm holding on to a name from a guy that's been doing this for 30 years. He is the man, okay? If you go back to how Silicon Valley started, okay, designing silicon, that's where it got its name. Jensen Huang was there, okay? He created the GPU. Like, let's be real. And then people are like, he's not the guy. These are fraudulent numbers. He doesn't understand the depreciation. He created the depreciation. Okay. Anyway, all that being said, we got some green candles. We are at 181.50, up 0.5% on Nvidia. But don't let me see this go back down to 170. I'm sick of it. Okay? I didn't do anything wrong. Okay. But it's true. Guys, it's cheaper. It's the second cheapest name in the Mag 7. And it's growing faster than any of them. Let's put this up on a... Wait, can we do that? Where's my trusty fiscal AI? Bear with me. I got to go back. And, okay. So, I showed you earlier that they are, well, this is going to be a little skewed if any of those companies had fallen below profitability during that time. Nvidia, Oracle, Microsoft, Apple, Alphabet, Amazon, Meta, Tesla. Okay. This is just forward PE. Apple's the most expensive there. Meta's by far the cheapest. Second lowest at 26.2 times Nvidia. Okay. But then we have to factor in, all right, well, what's that growth? You know, what are we factoring in for growth here? Well, we can go to, well, we can back this up a little bit. And honestly, Nvidia, I don't even want to skew this. I'm not trying to skew this. I'm not even going to look at whenever they put up those extremely high numbers. Now, this is saying that it's calendar Q4. It's not. It's just Nvidia's been doing it all wrong. They are a year in the future. Don't worry about that. Their Q4 is essentially compared to everyone else's Q3, and their Q3 is compared to everyone else's Q2. Essentially, they're only a month into the future. That's it. It's not a quarter into the future, but it does mess up everything. That being said, whenever you still look at them, I wonder which company over the last year or two, one of these companies is not like the other. Okay? That one's kind of skewing it a little bit. Honestly, all their quarters, I've got to bring it in just so I can see the other names. Meta, these are the two cheapest names in the entire Mag 7 right now on a forward PE basis, are the two fastest growing. Nvidia growing at 62.5% and Meta growing at 26%. Microsoft grew at 18%, Google at 16%, Amazon at 13%, Oracle at 12%, Apple at 8%. Okay, what do you want to grow at? Do you want to pay the price? Do you want to pay more for Apple today for 8% growth? And it'll be there next year, or maybe that's even true. Like, I don't even know. Right now, they have great customers that are coming back and buying. On the other hand, you have Nvidia that even if they just do like one more 60% growth, which is like what's expected to happen next quarter, do you know how much that accelerates how much money they're bringing in on the top line? But let's take a look here. I just want to see. No. Sorry, I'm searching in the wrong search bar. Let's just see total revenues. And then let's get rid of some of these names. So we'll get rid of Oracle. And yeah, it's just a lot to look at. Let's do this one at a time. So I was talking about Apple and Nvidia. Okay. You have, wait, this is not even, that's not even lined up, right? They just put up, that's only 46 billion. We just put up 57 billion. Okay, well, it's not even showing me Nvidia's next quarter, which would be at 57 billion, and then the next quarter at 65 billion. But one of these is staying extremely stagnant, and the other one has grown from being a pebble into, accelerating very, very quickly. Meta being one of the only other fast growers. Where is Meta at? Take away Apple. Yeah, and I'm not even getting to see their other quarter because Nvidia actually surpasses Meta here. We actually made 57 billion, which is more than Meta. So this is a little skewed. I'm not a big fan of that. And then the next quarter after that, they're expecting to make, 65 billion. I don't know, man. I wish I could show you guys the latest quarter in it line up with the Q3s because it should. I'll have a talk with the fiscal team about that because that's crazy. But yeah. And honestly, I'm not adding AMD here. I'm not adding AMD. It doesn't make any sense for me to add AMD here. I think Nvidia looks better. I think Nvidia is cheaper. I think Nvidia has higher margin. I think Nvidia has higher growth. We'll see. We'll see. One company is putting up like legit 60+% growth rates, and then the other one wants to grow at like 35% growth rates. I don't know. What am I buying? I'm buying a lot of Meta. I think that they are going to be looked at as one of the easiest buys right here. We're sub $600 and a company that just hasn't stopped growing. I'm nibbling on BM&R, but we really need to see this annual shareholder meeting or something. Like, what the heck is going on? I want to know how many shares that they have outstanding. Why was there no call? Like, why won't you let analysts, ask questions during the call? It's just, it's not the greatest feeling. VG looks crazy here, but I'm just not. I really, truthfully and honestly, whenever you are talking about this type of space and people are worried about what they're holding, I want to buy things that I know every aspect of that business. Maybe some of you guys are LNG experts. And there are YouTubers, you guys know them, Chris and Matt, like they are actual LNG experts. I'm not. So I don't know anything about the oil and gas space, let alone liquid natural gas. I don't know anything about their competitors. I don't know anything about VG. It does look cheap here, but that's just a random opinion of mine. So I can't act on it, unfortunately. Okay. LNG. LNG is liquid natural gas. But honestly, if you're calling it LNG, don't buy VG. Don't buy Venture Global if you think I said LNG. Okay. Is it the best time to buy Nvidia? How am I supposed to know? Well, okay, so I understand what you're asking, and that came off rude, but I don't know. If you were to look in the past, it's definitely been cheaper than where we are today. That's not fair to say. Has it bottomed? No one knows. People will tell you they know, they don't know. But it's definitely if you are DCAing into it, I think that's probably one of the better bets. I've given you what I think about Nvidia right now. I just had an Altman moment. No, I don't know. It's hard because there's new people that come in all the time. But like I said so many times, I am no oracle. I can't predict markets. I don't think very many people can. People put out a lot of information and then they call that they said that they're right on the stuff that worked, and then they bury the information of the stuff that they didn't. I don't know. I'm buying the technologies that I hope will continue to accelerate. I'm flooding into quality. I find it's very important to buy quality here. I'm not looking to buy into names, speculative or not making money or anything along these lines. And then hopefully, and like stuff like Rigetti, I'm absolutely not touching this. Does Rigetti, and I'm actually asking, I don't know this, do they make $1? Do they make any revenue at all? And from if there is revenue, let's just see. There needs to be a price to sales here. It does look like they might make some revenue. Yeah, I mean, they made $7.5 million in the last 12 months, and it's gone down. Over the last years, they've made 13 million, then 12 million, then 11 million, then 7.5 million. And the stock is 7.5 billion. I'm okay. Zeta looks good. I'm a big fan of Zeta. Of the small amount that I've made into it, I have not made a purchase or anything. We're a little green today. That's great to hear. Gotta love it. No, I've actually not purchased dLocal at these prices. I should, but it's just been mainly like really high quality names that I just like. I don't even have to be speculative on payments right now. It does look like a good price, but maybe there's an issue with payments that is more of a longer term issue than what I'm giving it credit for. So I haven't sold a single share, but I'm just not currently adding to it. Okay. Do you think that Hood is more attractive than SoFi at these prices? Let's take a look. I wouldn't say so. What's going to happen first? SoFi goes to 50 from 25, or Hood goes to 214 first? I think Hood is going to do exceptionally well long term. But if this had shaken out any retail confidence, then I am a little concerned about, how good their growth is going to be next quarter, and they have incredibly hard comps to put up. But yeah. What do you think on Lemonade? I don't really have an opinion on the insurance names. From what I've seen, they've continuously done well and improved their numbers and, stuff like this. But I apologize. I don't really have an opinion on Lemonade. Dude, you really picking Hood over SoFi at these prices? I literally said quite the opposite. I'm not sure how Hood is going to fare at these prices. I think that SoFi probably gets to 50 first. Did I not say the opposite? If it didn't come out that way, I do still think that Hood probably does, or sorry, yeah, maybe I did say that SoFi probably does better. Okay. Tanner, I know that you said you haven't looked into it, but Sezzle is growing at 70+% revenue. Yeah, I've always had this weird thing about buy now, pay later, where I've just never understood what gives them a moat. Like, they have to pay, get on these. What's the thing? Like, whenever you look at a payment screen, I forget the name now. I haven't looked at these payment names in a while, but they have to pay for viewage on those payment checkout spaces. And I just wonder how that's not going to be just dominated by the customers that are already there, the Stripes, the PayPals, the essentially Visas, and all of these ones that just get into buy now, pay later. But yeah, so I'm not looking for the word checkout, but there's a term for it where the higher up you are, like whenever you see a list of payout options, like, oh, you can pay with Apple Pay or Google Pay or Visa debit, or at the top it might say check out with PayPal or Affirm, whatever. The higher up you are, the more likely that someone is to pay for that. So you pay for priority payment spots on that list. Well, I don't know if Sezzle is paying their way through that or how that happens, but yeah, I don't know enough about them, but I don't know what would make them special versus Affirm or a Klarna, or especially the current names that already dominate the space like PayPal. Okay. Okay. What do you think about Melly? I like Melly. Mercado Libre is a great name, and but they're a very long-term name for me. I don't look at them on a day-to-day basis. I know that they're going through some potential concerns right now, but I'm not worried about it in the slightest. I've got a really good cost average on Melly too, so we're just sitting pretty. Okay. Primary. Oh, I see. Is 4 at the bottom? I would like to think so. It's just incredibly cheap. Like, even if the market does sell off, you know, let's say we go into like a bear market and the S&P and the NASDAQ falls an additional, like 10, 15%, something crazy like this. How low can Shift 4 go? Like, at what point is it's just too cheap for the numbers that they're doing? That I'd be interested. I mean, obviously they would continue to drop, but I think they would actually outperform. Certain names like Shift4 or PayPal, it's like they are already so sold off. Like what are you going to start giving us like 20, 25% buyback rates? Like how low can these companies honestly go? At some point, like the insiders, the employees, they'd all just be buying back stock. I mean, they're still seeing the numbers go in. No, of course they can go to zero, but they can only go to zero if their companies are failing. Okay. Shift4 and PayPal make more money each quarter, every quarter. These are growing businesses. They make more money and, they see more TPV. So while you're right, I do agree. Companies can go to zero. I don't think growing companies that find new users, grow total addressable market, and take more market share can go to zero. I don't agree with that. But yes, payments are so hated. It is true. Yeah, Chime is being very sticky as well. This is another name. It's like, honestly, if customer like all these names that have just been sort of hated have not quite faced the downturn that we've seen other names face. If we look back to whenever this company went public, and this was whenever the market was doing well, this is all the way from June through October, this company did its big selling off. It's very cheap now. So if the market goes down an additional 10%, like how cheap are we going on Chime? We go back down to 16, 13. Like at that point, I'd be calling up Anthony Noto, be like, hey, man, there's an acquisition for you on the table. You should start aggressively buying shares of Chime. Like there's an opportunity to collect an additional 13 million customers on the down low here. When do we start discussing the next S&P 500 inclusion? I don't know. When is that? It's sometime in December. But you know what? I've got my cards on. I mean, I'm pushing the chips on SoFi. Let's go. I actually don't have Noto's number. I have his X, though. Anytime I've ever reached out to Anthony Noto has either been through the SoFi Investor Relations email or DMing him on X. But yeah. Amit's been looking down a lot lately. Dude, everyone's feeling it. I see it whenever I go across all live streams. It's like people have their money in what they're talking about, and then whenever those are down, that doesn't just hurt the content or something. It's not just content. This is like I was listening to Stephen Fiorillo yesterday, and he's like, only put your money into or only put the amount of money that you are willing to go down to zero. Guys, I promise you, I've got a lot more invested than what I'm willing to go down to zero. I do not believe all my money's tied up in U.S. Equities, all of it. So while I agree, it's good advice to tell people, hey, don't gamble with what you're not willing to lose. I'm not willing to lose all my money. I promise you that. But then that also means that, on the other hand, I have to not go crazy. There's no margin involved. There's no options involved. There's no expiry involved. And then I need to constantly remind myself, hey, there are other people that put up these higher year-to-date returns than you. But on the downturn, those people they lose their shirt. And you can protect yourself by buying great companies that have real fundamentals, not fundamentals into the future, but real fundamentals today, and hopefully do very well. And that's worked out. The TSX is worse than the OTC. It's true. The Toronto Stock Exchange is terrible. I would never even tell any Canadian to invest in Canadian stocks. There's one Canadian stock that I think is worth investing in. That's Shopify. Everything else is straight garbage. I don't know what it is. Maybe it's just too cold up here to care about trying to make any money. But yeah, the entrepreneurship is just not here. Yeah. Okay, guys, there's other names. I'm aware. But none of those am I investing in anyway. I'm not looking for Constellation or Brookfield or any of these. I don't care. Enbridge. Yeah, no, I'm not saying that there's not good names. I'm aware. It's just not what I invest in. Okay. Is Abcellera? I didn't actually know that. Abcellera is a Canadian. I wouldn't touch Abcellera either, but not because they're bad. It's just out of my, scope of knowledge, but I didn't know that. Chances of a rate cut flipped on its head yesterday. I have not changed my opinion whether or not this thing says, 20 again tomorrow. I think that we need 25 basis points of cuts in December. I'm hopeful that happens. We're at a 69.5% chance of that happening. We'll see. I wanted to bring up, however, a clip about crypto pullback right now. And before we do that, let's take a quick look at the crypto markets. Also, just look at the speed at which we crashed. This is just insane. This is in the last year. Absolutely incredible. So now we're sitting at 2783 on Ethereum. We actually touched earlier today at 7 a.m. $2,620. Bitcoin at 84.9. That means strategy or MicroStrategy is at 174.57, and BMNR is at 26.18. And just for funsies, just because I want to know, SBET 950 is sitting at 876 earlier today. That ain't it, Chief. Okay. Let's go ahead and take a look at some other commentary on crypto.
Bitwise Asset Management CIO Matt Hogan. Bitwise is a crypto asset manager with more than $15 billion in AUM. Matt, it's good to see you. Thanks for the help today.
Thanks for having me on, Carl.
It sounds like you think we're getting close to some area of stability.
I do think we're getting there. I think it's a sort of a tale of two markets right now. You have short-term investors looking at the market and seeing a lot of risk, the DAT trade unwinding, global risk-off sentiment, some fallout from the October 10th volatility event in crypto. But you're starting to see long-term investors nibble at the asset at these prices. I think it really comes down to your time frame. Could this go a little bit lower? Could it go down to 70K? That's of course possible. But long-term investors like the Harvard Endowment, the Abu Dhabi Sovereign Wealth Fund are looking at this thing and saying the long-term trend is up, regulation is up, institutional buying is up, the debasement trade is on. It really just comes down to your time frame.
Right. You mentioned this, the mid or low 70s. I guess is that a discussion about the cost of production right now?
It's mostly focused on, we had this huge move up following the election of Trump, right? And the idea is maybe we retrace all the way back to those prices. When I talk to people in the field, a lot of people are looking at this particular level around 84,000 as a potential bottom. That was where we retraced to in March, what was the last pullback in crypto. Some people are going all the way back to the Trump era election and saying maybe we need to retread that ground before we base and go up. Anytime you have a big bull market move in crypto, and we did from 70 to 125K, you get a lot of new investors into the market. Some of those are diamond hands and they're here forever. Some of them get shaken out when the first volatility occurs. We're seeing that shakeout, but again, I think we're closer to the bottom than we are to the beginning of this pullback. I think it's a great entry point for long-term investors looking out into 2026 and beyond.
Matt, Tom Lee of Fundstrat came on CNBC yesterday and said there may be a software glitch or some sort of bug that contributed to the sell-off. Do you have any evidence of that?
Sure. I love Tom. He's an extremely great analyst. I think pointing to any one factor for driving this is missing the boat. You know, I think crypto is down because global liquidity is down.
Really quick, do you guys want to do the SoFi Q&A for crypto? That's supposed to be on right now. I think. No, yeah, November 21st at 10 a.m. PST. I have it open. Do you guys want to listen to that? It's with Flory Gilroy, who is the co-founder of BlockFi, who has actually joined the team. Okay. She's not there yet, but maybe we can listen to that to hear what SoFi Crypto has coming. Seeing a lot of yes. No, yes. Yeah, I'll pull it real quick. She still is not on thing. I'm surprised she's 3 minutes late though. Making me feel like I've got my dates mixed up. November 21st at 10 a.m. PST. That's now. Okay. Real quick, let's put up SoFi stock going into this 24.94. Oh. No, not starting. Okay. She's late like Tanner. Well, let's not disrespect her like that. Okay. Oh, I think it's starting. Okay. I was going to pull it, but do we want to see it? Let's try. SoFi Crypto. No, I'm just going to do it. Let's listen.
Signed up for our wait list. And at SoFi, we
Exclusive
put
event.
a lot of work into constantly thinking about what our members want and how we can constantly improve your experience with us. And today we're going to be talking about our newest product, SoFi Crypto. And there's a lot of things to be excited about here as we thought about what to build next. I think crypto goes hand in hand with all of the existing SoFi offerings. So it is an amazing one-stop shop where members can access everything from checking and savings accounts, different types of debit, credit cards, lending products. And so for anyone that's familiar with crypto, it kind of is a no-brainer to add this product into the SoFi ecosystem. And we were really excited because we worked really, really hard to become the first and only national chartered bank to offer crypto to consumers. And so today we're going to dive into a little bit more how SoFi is now the only place where you can bank, invest, borrow, and now buy, sell, and hold crypto. And it's definitely, I think, a landmark for financial services in the US. And we're excited to share more with everyone that's on the call. So kicking things off a little bit about myself, I am the business unit lead for crypto. And what that means at SoFi is we have different types of business unit leaders that are in charge of the different products. So I mentioned, we have a business unit leader for our lending products, which we call Borrow. We have a different business unit leader for someone who manages the checking and savings account. And I'm really happy to have joined earlier this year to form SoFi's newest business unit, which is fully dedicated to crypto. Prior to this, I spent my career working in financial services. So I worked in fixed income asset management, and also I worked for a startup that made loans to small businesses. And then I spent I think around 7 years building a platform that did financial services for crypto investors. And that was something that was available around the world, and we offered a variety of different products. And so I have a lot of experience understanding consumer needs and how to build financial products leveraging crypto rails. And I think some of the things that make me extremely excited to join SoFi are the fact, everything that I just said, where SoFi has the existing ecosystem to really build financial products that serve consumer needs in the US. I do think crypto is this missing piece, which will only make the products better for anyone who engages with the app. I also think crypto is here to stay. So people aren't walking away from crypto. There's more and more engagement across the US every year that goes by. And even though ownership is at all-time highs, I do think that people want safer and more regulated access. And this is where SoFi comes in as the answer. SoFi is able to offer bank-grade trust, discipline, and transparency, and that's something that's new for the crypto space. So when we thought about what should we build next, it was very important to always look to our members. I think that's something that's a huge focus for SoFi. It's a company value to be member first. And 53 of members said that having crypto on the platform would increase satisfaction with SoFi. And I personally love this because I think it allows people who are otherwise banking in one place to also have their crypto held at a bank, which is something that has never been available before. And we'll go into a little bit how the product works in a bit. But for example, something that's new is that it allows people to access checking and savings accounts, which have FDIC insurance on one end of the app, and have that cash parked with SoFi. And at the time that you want to purchase crypto, you'll be able to access that cash and transfer it to purchase crypto for the first time. And that's really new because if anyone engages with crypto today, you'll know that when your cash is parked at an exchange, that exchange is not a bank. And so they cannot offer you FDIC insurance on those cash deposits. So being able to put those two products together is something that's never been available before for crypto investors or people engaging with financial products in the US. The other piece that was really important that I honestly was surprised at the percentage, but it's great. It's that 60% of people would prefer to trade with a licensed bank over their current primary crypto exchange. And I think anyone who works in the banking industry knows that being a regulated bank requires a huge amount of risk and compliance and internal governance structures. It's unlike other structures in the US. And so I do think it's a huge differentiator for anyone who interacts with SoFi to know that we are regulated by the OCC, and that is true of our platform and how we've thought about developing these products, right? So we've thought about what are the existing infrastructure systems that SoFi has to govern their other products, and how can we build within the SoFi ecosystem and add even more governance and security and compliance to ensure that we are building this in a way that can last in the long term. So I've mentioned this before, but we are so proud to right now, well, we will always be the first, but right now we are the first and only national chartered bank where members can bank, borrow, invest, and now buy, sell, and hold crypto all in one app. And this is just an incredible moment, I think, in the United States, because we have.
If this is a little too basic, I might have to click away because this is super introductory. I was hoping to see more of what SoFi is going to offer rather than just, where they are.
Hopefully, I don't know if will this play automatically? Well, if not, we can make sure that the link is available. But we have a teaser trailer, and if you haven't checked it out, it's on our Twitter. It gets me super excited about the product every time.
Okay, let's take a look at markets. I'm going to keep that up on my screen really quick. If they start to show off something, I'll switch over very quickly. Actually, she's going about it right now. So hold on one sec. Hold on.
To get early access. And what's amazing is how we've thought about the user experience. I think it's in line with everything that SoFi does, which is how can we make this simple, easy to use, and also really focus on transparency. If you're a brand new user for crypto, you'll be able to, on your app, like you see here on the left, see a new card. So previously you would have seen banking, loans, and investing, and now you'll be able to click on crypto. And then from there, you'll be able to open your crypto account. And so that will allow you to enter the space, which is kind of our newest product line, and it'll go in line and parallel to banking and invest products. And then if we go into the next phase, a couple things that will set us apart. So I talked about this earlier, but we do think it's incredible that you'll be able to offer the SoFi, or you'll be able to access the SoFi checking account, which actually has a higher interest rate if you're a SoFi Plus member. So it's like a double plus benefit if you want to click into the different products that SoFi has, and you can keep your funds there earning that higher interest rate. And at the time that you want to purchase crypto, you can essentially instantly transfer it from your money account into the crypto app. And then you can place a trade. So you'll see on the left where you can select where you're funding from. And then you'll be able to purchase the cryptocurrency of your choice in the crypto app. So basically, your cash can be held at the checking and savings portion, FDIC insured, earning interest up until the moment that you want to convert it into crypto. You'll also be able to fund via a debit card. And I've seen a lot of questions on this. It's hard to keep track. There's so many. I'm glad you guys are so engaged. But you actually will be able to deposit crypto from your other accounts into the SoFi experience. And we think this is extremely important because, as some of you might know, SoFi used to offer crypto trading back in the day. And we knew that for those members, it was really important to be able to bring your assets back home, if you will. And so we wanted to enable that feature for you. So diving a little bit more into the product experience, we just went through the home screen. It'll be very similar to how you look at your invest products when you see them in summary. Again, we're really focused on the core values of SoFi. So really designed for someone who
Who is this degen that they're showing off here that has $27,000 in their bank account, $38,000 in their invest account, and $76,000 in their crypto account? Is this her account? Guys, crypto is cool, but like, let's keep it into perspective. I'm not putting over 50% of everything I have into crypto. Okay, let's see what the trading experience has. I'm pretty close to clicking away. This is mad boring. I'm gonna let it run for one quick second. Take a pee, and then we'll jump back into the markets. But maybe something cool happens.
Of effort into, and it's something we're testing rigorously to make sure it's the best experience for our clients. And then on the crypto deposit side, you will be able to generate wallet addresses for certain cryptocurrencies, and we're going to be working on expanding deposit availability as quickly as possible, so that you can bring your assets from other platforms onto SoFi. And I'm happy to walk people through how to do that if we have time at the end. And then, as I mentioned, a huge focus on search and discovery. So allowing people to click into different cards to learn more about the assets that are offered on the platform so that you can make the decisions that are right for your portfolio. And then finally, we did design a whole new web experience, thinking about how people want to engage with crypto and how should that experience be differentiated from the other products that we offer.
Is it cool?
I think in terms of the key points that we think are really important here is that
was it.
People aren't walking away from crypto. Crypto is here to stay. And I think for a company like SoFi that is...
Okay. No, you're still on. Turtleneck, I don't even know what you hate about it. Obviously, the high majority of people are not like us that are using these products, right? So I do think that it's important. I always think about my girlfriend, right? She needs a video like this. She needs a breakdown. It is important for the multi-millions of users. I'm just hoping that they would have went in depth or something along these lines, but maybe that's more for the investor days. So, yeah. I don't know. I don't think there's going to be...
to embed these assets into the other products that SoFi offers. So after we get done with launching this product, we're going to be wanting to listen to our members and understand your needs as they relate to crypto, and understand how can we mix the expertise that SoFi already has with crypto to give you everything that you need in one place. And there's so many different ways in which you can embed crypto into existing financial products.
Just hit me with the honk shoe. Honk shoe, honk shoe. Let's go to Fed Governor Stephen Moran, see what he has to say. Dude, if that was the real count of the amount of people watching the SoFi Q&A, from what I just saw, I think there's 8 people watching. If that's true, maybe there's 8 staff members. I hope it's 8 staff members. If there was 8 people watching, okay. Let's go ahead and have a listen here.
Good morning. Good to see you once again. Thanks for being here.
Thanks for having me back.
We've got to start with the labor market. Your reflections on what we saw yesterday. Does it lean one way or the other?
Yeah, I mean, I think the implications of yesterday were obviously dovish, and if anyone was on the fence, I would hope that this would move them in the direction of cutting. I mean, you saw the unemployment rate edged up a bit. You saw some other indicators like an increase in permanent layoffs. those are indications that the labor market has been affected by restrictive Fed policy. And given the outlook for inflation, there's not really much of a need to be as restrictive as we are.
And yet on the committee, we have pushback. Almost immediately after that, Fed Governor Michael Barr had this to say: I'm concerned that we're seeing inflation still around 3%. Inflation's closer to 3 than it is to 2. What do you make of that argument? How persuasive is it?
It's not persuasive to me, and I'll tell you why. All of the inflation excess, almost all of the inflation excess is a mirage. It's not indicative of supply-demand imbalances. And so, for example, if you look at the housing market, right, market rents have been running at about 1% for a couple of years. Measured inflation in the index is actually much higher than that because it takes a really long time for the index to converge down to where market rents are. That's a statistical artifact, right? That's an artifact of the statistical measurement process. It's indicative of a supply-demand imbalance that was there in 2022, 2023. Monetary policy works with lags. It has to be set now for 2027. So when you look at the housing data, right, you see market rents running about 1% for a couple of years. There's no supply-demand imbalance there. We should not be setting policy for 2027 based on a supply-demand imbalance that existed in 2022 or 2023. That doesn't make any sense. There's other things too, like portfolio management services, which confuse quantities for prices. This stuff is all well known. If you look at market-based measures of inflation, they're much closer to 2 than they are to 3. So I think that the excess, the overage, is a mirage, and it's a mistake to ask people to lose their jobs because of quirks of the statistical measurement process.
And you've got to put out new forecasts on December 10th as well, which is going to be complicated by the fact we've had limited data more recently. How relevant do you think the calendar actually is? Because I'll offer you the perspective on Wall Street at the moment. It goes something like this. The meeting's on the 10th. You don't get the data until the 16th. The Fed's kind of constrained by that. They can't do anything. What's your perspective on that?
Yeah, so as I said a moment ago, monetary policy works with lags. It would be much easier if it hit the economy immediately, but it doesn't. It works with lags. So you have to set policy based on the forecast. So the data matter insofar as they affect your forecast. It doesn't make sense to be setting policy for where the economy was 3 or 6 months ago. We should be setting policy based for where the economy is going to be 12 to 18 months from now. And so if we have data, it gives us the ability to update our forecast. But the lack of data doesn't mean that we don't have a forecast. We did have a forecast. And all it gives us is opportunities to falsify our forecast. And there hasn't been anything in the data, in the news, in media stories, in private sector data, alternative data that's available to us, that would make us think that the forecast is somehow nullified and there's been a big shock to it. So if anything, all the information that we've got in the interim since September FOMC has inclined to the dovish side. We got weaker inflation than people expected, and we got a higher unemployment rate than folks were expecting. So all of that information should push one in the dovish direction.
But there are still Fed officials that are looking for more data. And they have said they're data dependent. They want that insurance that they're cutting right now, and it's the right time. Potentially the unemployment rate might be moving up to 4.5% on December 16th. Would you be in favor of just moving the meeting if it meant others felt more reassured to cut interest rates in December?
So, I haven't really thought about that, and it's not a conversation that I've been part of. I agree the meeting dates seem kind of arbitrary, but at the same time, there's a lot of stuff that gets done as a result of those meeting dates, and people have investments and contracts and other decisions that are tied to the timing of the meeting date. And I don't know to what extent moving those dates would be disruptive for all that. So it's something that I'm not sure about. But this ultimately comes down to the question of data dependence is what you do when you don't have a forecast or when you don't have any confidence in your forecast, right? We should be forecast dependent, not data dependent. Being excessively data dependent is to be too backward looking. And if you're too backward looking, you necessarily are going to have the wrong policies.
Neil Dutter writes in, he says, the only question that matters for you is, will you descend for 50 if you believe it means not being able to push through a 25 basis point cut?
Yeah, so absolutely not. I would absolutely vote for a 25 basis point cut if my vote were the marginal vote. There's no question about that. To do otherwise would be to cause real harm to the economy for purposes of vanity, and that's not who I am.
Going into next year, talking about the forecast of what's going to happen, a lot of economists who come on the show expect a reacceleration on the backs of the tax refunds and some of the other stimulative measures that could come early next year. How do you factor that into your forecast for ongoing weakness in the labor market and the consumer?
Yeah, so I think that, I have not been what I would think of as excessively pessimistic on the economy. I do think policy is restrictive, and I do think that it's too restrictive, and we don't need to be. And the longer we remain restrictive, the greater the chances that we are the source of an economic downturn, which we should not seek to be. I think that many of the factors that will be kicking in over the next 12 months that might be supportive of GDP growth are things that necessarily don't have hawkish implications for monetary policy because they affect the supply side. And when you think about things like relaxing regulations, and I think that has been going on at actually an impressive pace, these are things that push out the supply side of the economy and therefore don't necessarily create a demand excess of supply. Right? Monetary policy should be tight if demand is too much in excess of supply. And if you push out the supply side of the economy, then that's not something you worry about.
There's a duration mismatch here, though. The idea that if you reduce regulations and you allow people to build supply, that it takes longer time than, say, if you give people $2,000 checks right up front that they can spend immediately, or if they get a rebate that's a lot bigger from their tax filings. How do you factor in that timing mismatch? Would you look through any bump up in inflation next year from both stimulative measures as well as the price increases that we're hearing from a lot of retailers that they're going to pass along?
So, I wouldn't look through bumps from checks like that, right? I don't think that you'd be able to. However, a policy like that hasn't been formalized. It hasn't been introduced. We don't know the parameters of it. It's too early to sort of think about basing a forecast on something like that. What we do know is that the labor market data have been coming in not as strong as we'd like them to be, and that policy is too restrictive.
Governor, if we can stay on inflation, do you know when we're going to get some inflation data? When are we going to get that? Because we've heard about the payroll schedule. I haven't really heard anything about the CPI schedule. You've got any indication whatsoever of when it's coming? Yeah,
the BLS put it out on its website this week. I think that we're not going to get the November CPI data until after the next FOMC meeting.
So we've got to wait for that too?
We've got to wait for that.
Did you see that, Lisa?
Yes, I did. I saw that
Yeah, it was, if I remember correctly, December 18th is whenever we get the November one. October is just not ever going to be published. So yeah, we even have to wait after the December meet, which means they're still sort of flying blind, which is not good, but also I still think a cut is better and safer than holding steady and waiting till the next meet.
we have to wait, and it's not clear exactly when we're going to get it, but there's a real question going forward about when we might get it.
But we don't have the dates yet.
But we don't have the dates.
No, the dates are on the website. Yeah, the BLS has a list of the release dates on their website.
I saw the payrolls one, but I've missed the CPI one.
Yeah.
Which doesn't that just make it an even stronger case just to wait and have this meeting when we've got all this data? Why is it that we have to wait so much longer for it, Governor?
Wait for the data?
Yes.
Well, because the government shutdown introduced a whole number of snags into the data collection process. And so those snags mean extra time to collect the data, extra time to process the data. People have a logjam of work to get back to. I mean, we just, sort of spent several years talking about bullwhips from supply chains, right? And, the demand gets pulled in at once. And when you have a government shutdown, all the government employees aren't working, and they come back to work, and they've got a ton of work to do all at once. And so, we have those bullwhips in government data right now. And, if that were a market, you'd see some inflation in the price of data, but it's not a market. So.
Forgive me for coming out with the hawkish hits, but we got another one in the last 24 hours too, and it came from Beth Hammock. Lowering interest rates to support the labour market risk prolonging this period of elevated inflation, and it could also encourage risk-taking in financial markets. Can we finish on that last point? Risk-taking in financial markets. How excessive is it, and should it be on the radar of the FOMC?
Sure. So first of all, as I said before, the excess of inflation is a quirk of the statistical process, and it is a mistake to ask people to lose their jobs as a result of a quirk of the statistical process. On financial markets, look, I think that lots of things affect financial markets. Tax policy does, regulation does, technology like artificial intelligence does. It's a mistake to conflate the stance of the status of financial markets with the status of monetary policy, right? Even when you look at something as a financial market as deeply connected to monetary policy like interest rates, we've lived through periods of conundrums, right, where passing through of the Fed funds rate into longer term interest rates was confusing to people. So it's just a mistake to do a one-for-one mapping of these things. And I think that when you look at financial conditions, the financial condition that matters most for the real economy has been and remains housing, right? And this is an area where financial conditions are not loose. This is an area where financial conditions are still quite tight. going out, getting a mortgage, this is not something that's not a financial condition that I would consider to be excessively easy. And so I think it's a mistake. And I think,
which is, by the way, the complete opposite of what Beth Hammack actually said. She said, it's really not restrictive at all. No, it is restrictive. It is high. I mean, relatively to where we could be right now versus unemployment raising. I mean, yeah.
It's also a mistake, as I said before, to ask people to experience job losses because you think the stock market is too high. I don't know what the right level for the stock market is. And I think that it's a very challenging question to be able to answer credibly, and to say that we need to create job losses in order to sort of restore the stock market to some level that we think is more reflective of fair value is just not a policy view that I hold.
A lot of people have come on the show and said that right now the Fed is stuck between a conundrum of the K-shaped economy, where you have people at the upper end who are doing just fine and are supporting consumption, and people on the lower end who are experiencing a lack of wage gains, and they're experiencing those job losses more significantly. How concerned are you about sort of your dual roles of trying to help prop up and prevent some of those job losses from really escalating, while at the same time potentially cutting rates would exacerbate that K-shaped and only exacerbate what you're seeing with respect to the wealth divide?
So Congress didn't task us with addressing all social problems in the world, inequality one of them. They tasked us with tackling aggregate maximum employment and stable prices. And so, therefore, the right policy to take is to stabilize employment and prices, and that's the policy. That's the policy that I support. I do think, though, while discussing the subject of inequality, it would be much worse for the people at the lower end of the income distribution if the unemployment rate continued to go up as a result of our policies. That's not something that they would welcome, and it's not something that I would welcome either.
Governor, I was with the president this week in the Oval Office, and I asked him about the Fed interviews. He says lots of names. We may go the standard way. Quote, it's nice every once in a while to go politically correct. Out of the names that we know that are being interviewed, who is politically correct?
I don't really know the answer to that question.
But you worked for the president, so you understand how his mind works. Do you think it means someone that is currently on the board, like a Governor Waller, or someone that's very close to him and your former colleague, Kevin Hassett?
Yeah, so it should be pretty clear that I just always say what's on my mind, and therefore I don't even know what politically correct is. So I don't even know how to begin addressing that. But look, I don't make personal
decisions. You're being too politically correct right now, actually.
Am I? I've never been accused of that before. So hey, I'm happy to have it first.
Governor, very diplomatic.
Okay, let's get a very quick perspective from someone that is not currently a Fed governor and, maybe doesn't have to, quote unquote, pick a side. Let's have a listen to UBS's commentary on whether or not the Fed should cut in December.
Here at Post 9 this morning by Nadia Lovell, UBS Wealth Management Head of Global Equity Strategy. It's great to have you in, Nadia. Good to see you. Has any of this volatility shaken the house view?
No, it hasn't. We understand that markets are likely to remain volatile near term, but we like to take advantage of these sort of technical pullbacks. It's clear that some of this is being driven by a repositioning of the systematic community, so we could see volatility remain in the near term. But when you look at the fundamentals, right, we have an economy that's still growing. When we look into 2026, we think we're going to see trendline growth, 2%. Earnings that has been quite strong this past earnings season, and into next year we think we're going to get 10% at least earnings growth, right? So when you all stitch all of that together, it's really hard to see anything that really to derail this bull market in a sustainable way. So we think that we could see an S&P that gets to 7,700 next year
by December of 26. Does the earnings growth emphasis on Mag 7 take some of the shine off? The idea that the other 493 aren't seeing those kinds of upward revisions?
You're not seeing like the same magnitude that you're seeing in the Magnificent Seven, but you are seeing a broad in and out of earnings. You saw it in the third quarter earnings season, and we expect that to continue into 2026. The fact is we have an economy that's still growing. That should help the cyclical areas. And if we do get those Fed cuts, those interest-sensitive areas of the market should be able to participate again. And we think that we will get at least 50 basis point cut by the end of the first quarter.
Given
given that we're not expecting major government data before the December meeting, earnings season is mostly over. Do you feel like the market is kind of driving in the fog, as Chair Powell had used that analogy before? And do you think the bias at this point, whether we're relying on kind of what the systematic strategies are doing or otherwise, is still to the upside? Because it feels like, at least this week, maybe last week, there's been more of a sentiment shift on that front.
Yes, so of course we've seen a bit of sentiment shift in terms of some downward pressure on the market, but we do think that it still sets up well into year end. Positioning is cleaning up, so that should help as well. And we'll see what the spending season, the coming holiday season looks like. But I think once you peel back the onions and really look at the fundamentals, we do think that long onlys will take this opportunity to engage and really buy the dip. It could take another week or so, though, Leslie.
Another week or so. That's not too long.
It's not too long, but look how quick sentiment changes, right?
Yeah.
That's the point about sentiments, but the fundamentals are still there. And while we've been in this sort of data blackout, we do think that the Fed will cut in December because the labor market data, the anecdotal data, the private data does point to a softening in the labor market. So it's hard to see the Fed remain on the sideline, even though it's feeling like it might be a coin flip.
Right. We know about the U.S. underperformance versus the rest of the world this year, and there have been some high-profile calls for that to continue for maybe the next decade. You think that's true?
Don't think that too, because we think that the structural growth trends are strongest in the U.S. around AI, around power and resources, the electrification story that's happening, as well as longevity. And when we think about longevity, we're thinking about people living longer and healthcare. We're seeing a pickup in healthcare just in the last few weeks. Well, that's not to say that the international markets won't perform well as well, particularly like Europe. We do think that Europe can benefit from a recovery in the global economic environment. China tech also, we think, can do well, and parts of Japan as well. So it's about a global broadening out story, and not necessarily saying that you only focus on the U.S. It's having that more balance before.
Right. But you think you're overweight U.S.? Is that
we are overweight U.S., but we also have an attractive view as well on Europe and as well on China tech.
Okay, I mean, 7,700 for the back half of 2026 is definitely not bad. What we're at 6,600 right now, I think. If I so what is that? 15% upside, something like that. 15% upside on the S&P 500. I mean, you gotta like to see it. So, yeah, that looks very good. It's just whether or not you guys actually believe her or not. She glitched at the end there. It's a glitch in the algos. Yeah. Man, you guys loved the glitch comments, eh? I was not bothered by it, but yeah. Okay, let's go into some people asking what I'm keeping an eye on. Of course, Nvidia. If this continues to drop, if we do end up seeing, prices that are much lower, I will probably have to end up doubling down. I just not doubling down, but buying into more Nvidia. I might even do that through a different name, maybe. Like I think Rolex here in chat said, thoughts on Nebius. I might actually continue to buy Nebius instead to take on a little bit of diversification. Buy almost a proxy name for the AI trade. Continue to buy into the data center play, artificial intelligence, all of that. So that is something that I'd be interested in playing. I've made 2 decent purchases in Nebius so far. And wow, we're right back down to 83. That's crazy. We've been able to get shares under 80 today. I didn't even take a look at this. That's the thing too. I feel like that also brings me a lot of comfort. I don't actually check my accounts as much as you guys would think. I go in, I make purchases, and then I close the thing. Obviously, I know what my average costs are. I know how much I have in those names, but like Nebius, this is like the first time I'm taking a look at the name today. So, not freaking out too much. I can't believe you have cash left. I honestly don't. I don't have any cash left, but I do get paid I'm adding cash, and then obviously there are some names that I have less conviction in that I'm rotating out of into names like Nebius or like Meta, stuff like this. So there is a little bit of rotation going on, not super big, but yeah, buying when I can. Okay. Let's see. Why check if you ain't buying? Fighter, honestly, you're so right. You're so right. Why? Or if you're not selling. Tanner gets paid. Wait a second. Tanner, what is your day job? You're watching it, passive. I make videos and you guys come and you click the like button or whatever. Big chillin'. We're investors here. Okay. Open Door down 9% now. It was up 10% earlier. 8Co Holdings, honestly, bring that thing down to 0. I think these are the types of products that during this sell-off, just people realize like, hey, you know what? Maybe this doesn't need to exist at all. maybe this can go absolutely to 0 and no one should care other than maybe Dan Ives or something. IREN seeing a little bit of a sell-off here. Cypher Mining. Figure Technologies is down 4.6%. Snowflake down 4%. Overall, let's take a look at the heat maps of the day. It was, whenever we started the stream, extremely green. Aerospace and defense turned red. And yeah, honestly, this is still very green. Very, very green. Software infrastructure names down 1.2%. Everything else is relatively green. Nvidia is so shocking to me. I cannot believe this name is red. I talked about it earlier in the stream. I just can't get over it. How is this red? The most unbelievable earnings, and people still just say, hey, you know what? We don't believe in the product cycle going forward. Tanner's job is sauna sales. I wonder how many saunas I have sold through this job. Me just talking about my daily saunas. Any of you guys say, hey, you know what? Tanner's saunaing every day. I'm going to go look for saunas. Loving these midday streams. Thank you. Someone asked how I get paid. Ricardo, thank you so much, brother. Appreciate the 5. But what's it called? The midday streams are so much better for my education, for myself in the markets. I'm much more focused. Yeah, this is perfect. I love having the big community in here. And yeah. What sauna should I buy? I won't ever talk about brands. I'm not actually sponsored or anything like this. I'm not a sauna guy that way. I do like a steam sauna. It's my preference. It's what I do, water over coals. But I know infrared saunas and dry saunas are some people's preference. There's a lot of education to say that maybe dry saunas are the way to go. I don't care. I love the high humidity. Feels great. Personal preference. Yeah. Anytime Amit is not streaming, you should be. It's not like that. It's honestly, whenever I go to buy companies, I always tell them like these people cannot have any work-life balance. I'm investing in companies that have absolutely no life. Like, you look to the hoods of the world, up 0.7%, Palantir, like these cultural names, Tesla to a very real degree, like mission-driven, no work-life balance. You see that in maybe the Rocket Labs, the Teslas, the Coinbases, these mission-driven, these companies that are changing the world, or I guess, like they're building something brand new. That said, myself, I like a little bit of work life. I mean, I walk my dog. I spend a lot of time with my girlfriend. We, you know, I'm doing okay. The best part of his sauna is stepping out of the sauna. That's funny. Okay. Let's continue here. I listen to you all day, or you and Amit all day while sending emails. You just send emails all day? Which one was my latest buy? I think the absolute latest buy that I had was BMNR. There's BMNR or Nebius was yesterday. Yeah. Do I work out every day? Or try to every day, I should say. Yeah. Q1 2026 staking for BMNR. It definitely could be possible. I hope to see some staking out of BMNR. Maven, like we didn't really get a lot of information on Maven. Honestly, this quote unquote earnings was an absolute joke, in my opinion. I didn't really learn much of anything. We knew that they were going to stake very soon. If you were in the crypto space at all, you knew that they were going to a bunch of providers. Like there's no easy way to stake that much Ethereum. So, you know, I would have assumed that they started with a partial stake before staking it all. I think many people knew this, but yeah. Ever ride a horse? No. No. Yeah, they kind of stretched the letters to get to Maven. Maven stands for Made in America Validator, which they took the V and A and then network at the end. Not. It was a little bit of a stretch, but Maven does sound nice. Suggestions for new channel names: Sweat Equity, Steamy Returns. Sweat Equity's funny. Okay. Why is BMNR giving a dividend this early? Is that bearish? No, I think it's to get new, like essentially they just need a ton of volume going through. So then those hedge funds can use them as essentially hedging tools. BMNR needs to find more and more investors. So a single penny of a dividend for them per year allows potentially new investors that want access to Ethereum to look at it through the lens of it being a dividend stock. I don't think that the dividend is going to raise. I think that it'll stay that way. But no, I don't think that it's bearish. They're just looking for more liquidity. Okay, I have not talked about Google. We actually can talk about Google here really quickly. Google up 3.2%. You got to love it whenever Warren Buffett buys in, right? You just know that there's going to be a lot of belief, even though this is the same belief in AI is going to do well. The CapEx spend is perfectly acceptable, but yet it's not acceptable for Meta's a little different because they don't have the cloud and the recurring revenue there. But like a bet on Google is a heavy bet on Nvidia. Like, I mean, it is so real. Nice green candle. Holy. But yeah, 300 on Google. It still looks like a very good business. Growth looks great. They've got great products. I've said this like many times. I think search is maybe one of the most look at this freaking candle. Search is, probably one of the greatest businesses that we've ever seen in our lifetime. It costs nothing for them, and they charge huge amounts on a bid ask just because customers continue to show up to their platform. And I think that that's what really needs to be taken away from this last sort of decade or two, is that this online advertising space is such high margin. And then if you can get customers to your platform, whether that is YouTube, Meta, Google, like what space, Amazon, PayPal to some degree, It is such a high margin business just because you have eyes on your product. Okay. That's very exciting. That candle was out of control. Am I crazy by saying that? Is it big green and everything? Let's see. Oh wow, yeah, you're so right. Look at that. Look at this. The triple Q's up 1.5%. Are we back? Robert Kawasaki just said that he sold $2.25 million in Bitcoin at approximately $90,000. He said, with this cash from Bitcoin, I'm buying 2 surgery centers and investing in a billboard business. I think that's fine. I mean, I like Rich Dad, Poor Dad, but honestly, I do not care for any of the commentary that Robert Kawasaki has been up to lately. It's just bubble this and bubble that. It just sounds a lot like what Michael Burry has said. They called the last 20 out of the last, 2 bubbles. And wow, great. Okay. China, Trump, China. What's happening? Let's, okay, give me a sec. Let me take a look. Hold on. We might actually see the Mamdani speech here soon as well. They said that there might be a small list of investors that end up coming in. Trump team initially floating selling Nvidia H200s chips to China. That's if China lets them. Let's go to Nvidia. Pump. There we go. I don't mind it. I do not mind it. I just don't know if it's like, we've seen so many of these reports, guys. This is the reason why I'm not sort of changing my tone here, is that we've seen so many of these reports in the last little bit of, Trump allows for chips to be sold to China. China accepts the deal. China cancels the deal. Trump then, finds a new trade deal with China, reopens semiconductors to go to China. China declines that deal. It literally, I'll believe it when I see it. I need to see some China revenue show up on their earnings. And until then, it's all a pump fake to me right now. But here's the thing. It's so crazy to me that is what investors are getting hyped on. Like, yeah, that was from Bloomberg, by the way. That's very real. Internally floating, selling the H200 chips to China. Which every time that we do have a step up, that like from every chip, which is essentially the Hopper 100 to then the Hopper Ultra to Blackwell Ultra, the Vera Rubin to Vera Rubin Ultra. You should be able to sell those to China. They are way powered down compared to what we have today. They're still extremely good, and China would love to have them. But I just hope that they're not, faking us out here, and that we're not actually going to see some real news. Let's check if there's any commentary live, see what the street is saying about this right now. Okay. Let's see. No. Let's check the fear and greed level right now. See how that's switching. I think it hit a 5 today, if not a 4. Chance of a rate cut back up to 73.5%. Take a look at this. Yeah, the moves are so weird. But this is what I mean. Like what's the real negative story that's going on. The earnings crush, honestly, is enough for me. These companies are improving guidance. They're selling more. They're improving margins. To me, that's what I look to. That's extremely positive. But no, people want like anything to point to Nvidia is a sell. Like people legitimately want this company to go down. I've never seen a market like this. The market hates this AI boom, essentially. I don't know if it's just fear of losing jobs or that the markets are not going to be. Yeah, fear and greed's back up to 11 now. Fear and greed has essentially doubled from this morning. It's at 5. Yesterday it closed at 6. Right now it's at 11. Nice little pump that's actually being faded a little bit in the markets. But maybe it's a manufactured sell-off. I don't totally believe in a lot of that, but it is very surprising that the entire market is selling off on, one of the better quarters that we've seen. With your high conviction on Nvidia, would you reconsider stepping into CoreWeave? I'm not anti-CoreWeave at all. I actually look at things like their semi-analysis rankings, being the only company that's platinum, the strong backing from Nvidia to backstop anything that they can't sell. I think it's extremely positive. But I also have a little bit of CoreWeave through my Nvidia holdings. I know that's extremely small, but still. Okay, let's see. Nvidia 200 by next week, 220 by end of year. I honestly think that that's what we should be seeing. But let's go ahead and take a look at the market right now, seeing what options are telling the market. Hold on one sec.
Highest put volume all time, shifting in skew, which just means a lot more demand for downside options than usual. VIX term structure inversion, that's when you obviously looking at the VIX and see how that shot up compared to the rest of the VIX curve. We often look to those as capitulation indicators that all the kind of bad news is being priced in the here and the now. And we saw a lot of those elements yesterday. So those metrics may look scary, but a lot of times we think of those as contra indicators because all the bad news is being priced into the options market.
And some of these frothy names have really been squeezed. You've got Robinhood, Palantir, Coin sinking more than 7%, Bitcoin down about 10% just over 10 days. How do you read that?
Well, we're watching the options trading for a turnaround there. Unfortunately, in Bitcoin today, IBIT, the Bitcoin ETF, by far the most notable trade was a bearish collar where they bought 100,000 December 43 puts. So looking for more downside there versus selling the 53 calls, comfortable with less of a chance for a rebound. So, we're always going to be looking for the options. We're not seeing a ton of bullish flow there. We are seeing unwinding of hedges in other speculative areas like the ARC complex and in something like software that's been hit hard. We're seeing investors closing their puts there, but not so much in the Bitcoin ETF right now.
We have a nose alert right now. Chris, stay with me here on Nvidia. The stock is at session highs.
They're so late.
On reports that U.S. officials are having early discussions about letting Nvidia sell its H200 AI chips to China. That is a move that would mark a major win for Nvidia. You heard a lot of analysts and even Jensen Huang on the earnings call talking about optimistic expectations for next year, even without China, if suddenly the White House were to reverse itself and allow these chips to be sold to China, that could really boost Nvidia's bottom line. And there you're seeing the stock reacting now up a full percent. Chris, back to you. These AI plays have been sort of the theme that is driving all the other market action. Is that true for puts and calls as well?
Yeah, it's interesting you bring up Nvidia. Of course, we're talking about Nvidia every day, but we've been talking about since the earnings yesterday and since the reversal. Similarly, in the options, usually you see a lot of FOMO in the Nvidia options, a lot of bid to the upside options, less people reaching for downside protection. That's kind of flipped a little bit since yesterday's reversal, and over the course of the last week, we're seeing more demand for downside, less demand for upside. And that's why, something like the news you just mentioned is a little bit of a surprise, and that could change things. We'll have to check out, how the Nvidia options react to that breaking news.
If you're looking at an aggressive demand for hedges and some poor liquidity that might indicate some caution, then do you see this as sort of a fundamental breakdown, or is it something that is maybe just more sentiment driven?
I don't personally. I think that, kind of as you mentioned at the very beginning, what was really probably mispriced was a month ago when the most short baskets were outperforming the S&P by about 25%. People are still up on the year. The S&P's up 11 or 12% on the year. Things are getting a little shaky into year end. So it makes sense to start seeing an increase in hedging. 5% peak to trough pullback for the S&P, given everything that was going on in October, froth-wise, seems pretty standard to me. Of course, we're seeing more protection right now, but it doesn't seem like panic mode.
Chris Murphy of Susquehanna, thank you so much for joining us today. Again, you've got all the indices at session highs right now. Brian will have more for you on that ahead on Power Lunch. Thank you for watching The Exchange. We head to Power Lunch right now.
Okay, just in between that really quick, or actually, it's giving me no time. Do we want to watch the Power Lunch, see some updates there, or should we talk about where Nvidia is going and the potential for China sales of H200s? Let me know. Even if it allows to sell chips to China, they can't increase their supply. I don't agree with this. They will absolutely go to their suppliers and ask for more demand. I mean, they can increase their supply. Okay, let's take a look at Nvidia really quickly. Stock did like the potential news, but I think it's a little bit of a pump fake almost, where we've seen this story happen a couple times now. Stock's at 183. Essentially, what Jensen Huang has said previously is that the chip sales to China is essentially a $50 billion a year total addressable market. Okay, that's their opportunity. They were doing about $8 billion before, but could get up to $50 billion. So if you look at that as essentially a $12.5 billion revenue market per quarter, or what it could be, growing at 50%, by the way. They said they're growing at the exact same, rate as, they're growing at the exact same rate as US AI markets. Oh, wait, hold on. Okay, sorry. I thought Tom Lee was on, but that was from yesterday. Here, wait. I think they might be talking about Tom Lee. Hold on.
Or auto deleveraging, and that could be a cause of what has been happening the last couple of weeks. Now, those comments, as you might imagine, getting a lot of attention. Some people agreed.
It's
Some
a
people
glitch.
strongly disagreed. Your first guest today, firmly in the latter camp on that one. Let's welcome in VanEck CEO Jan VanEck. Jan, good to see you. Are you, and I'm sure you like and respect Tom Lee very much, but are you discounting that software bug thesis?
Well, I approach Bitcoin in the following sense: is should Bitcoin be in your portfolio, number one? And how
What's
do you...
the answer to that?
For sure.
Okay.
But, at least now for sure, but we've been saying that since 2017. Number one, and then what are the drivers to think about, whether it should be added or decreased in your portfolio? So there's two things. There's sort of mainstream global liquidity reasons to buy Bitcoin, just like you think about gold. But then there's on-chain realities, things that you have to know by looking at kind of the crypto ecosystem. And if you ever did a Bitcoin 101, everyone knows that every 4 years, there's this thing called the halvening cycle, right? Where Bitcoin miners get half the amount of Bitcoin for basically
the same work.
The same work. Thank you for making the simple phrase, right? And so we know that's happening. And every 4 years for the last decade, Bitcoin has had a big negative year. And guess what? 2026 it's scheduled to have a big negative year. So now what investors have been doing is pre-positioning for this bearish move. And Thanksgiving is such a funny time because literally Thanksgiving of 2017 is when Bitcoin came to a lot of people's attention. And so this is a funny time to think about it, but we have probably peaked in October and have a year of a bear market.
You X'd out or tweeted out that you thought that you were itching to come on, by the way. Hopefully you're not actually itching, you know what I mean? Go see somebody about that. But that you wanted to come on because of that. So what you're suggesting, what you're saying, not suggesting, you're saying it, is that this idea that because next year is likely going to be a tougher year for Bitcoin, some of the selling that we're seeing is just people getting ahead of that?
Yes. Look, this has happened. It's a 4-year cycle. Now, every cycle is different. What's obvious to everybody is that Bitcoin has gone up less this cycle, and so there's many people think it'll go down less in the correction. But that's just sort of one of the fundamentals. Now, there's something else going on within the Bitcoin community that kind of non-crypto people need to know about. And that is ultimately, VanEck has been around before Bitcoin. We will walk away from Bitcoin if we think the thesis is fundamentally broken. We don't right now. But you always have to look at the underlying technology. And the Bitcoin community has been asking itself about, is there enough encryption in Bitcoin? Because quantum computing is coming. And then secondly, is there enough privacy in Bitcoin? And so a lot of Bitcoin OGs or maxis have been looking at Zcash. And Zcash,
what's that?
Zcash is a token sort of related to Bitcoin with a lot more privacy. Because the kind of garbage that we got about Bitcoin 4 years ago is it's like used for all bad illicit behavior. But now everyone kind of realizes when you move money around on the Bitcoin blockchain, you can see it. You can see it move from one wallet to another. And a lot of people are looking for more privacy.
By the way, Jim Cramer kind of alluded to this yesterday morning on Squawk on the Street, where he talked about quantum computing and crypto. So going back to that, is there a thesis then or a school of thought that quantum computing, super duper computing, is going to eliminate Bitcoin in some way?
Well,
because it renders it less safe?
Right. So Bitcoin relies on encryption, but just everything relies on encryption.
It's like war games at the end of the movie where they're trying to find the code to launch the missiles. Take that to the nth degree, and if quantum computing can do that like that, are you suggesting that eliminates that safety of the ledger?
I'm just saying that's a risk. It's our job at VanEck, right, to explain to people why do you allocate to Bitcoin, right? Going back, there's these big global liquidity reasons. Again, think of gold. That's the one reason an investment committee would look at it. But they have to be informed by the realities of what's going on. It's a technology. I'm just saying it's a risk. And I think it's really the 4-year cycle that's getting priced in right now. And as with everything in investing, you don't want to chase bull markets like some people do. We at VanEck say, do dollar cost averaging into bear markets.
So this is, let me just go a little broader, because some people at home might be watching going, man, I'm interested, but I'm not sure of all the language. And to be, folks, I'm not sure I am either. Okay, I want to be very clear. This is complicated stuff. Gold is not complicated. Gold you dig out of the ground, right? I can own it. I can turn it into jewelry. I can buy an ETF if I want. It's heavy. It's pretty. I can store it. It's not a complicated story. I know you've got Bitcoin ETF, HODL. Is there, hold on for dear life, is there an element of the Bitcoin story that because we're having to have these conversations alone, people stay away from it? Because they don't understand it, right? It's like Warren Buffett talked about the internet stocks 20 years ago.
Absolutely, right. And what's happening in the wealth community, Brian, is a lot of people are saying, I don't know how to allocate to Bitcoin. We actually do that for clients. So we have model portfolios. All I'm trying to explain right now today is that there's two components in our analysis. Again, one, macro global liquidity. Is there a lot of money around in the world? If so, then people will like a hedge to that, like Bitcoin. And then number two, what's actually happening to the technology? Because it has to work. The Bitcoin network has to work. And we're just trying to simplify.
Well, this kind of stuff probably chases, but this stuff might chase people off if they feel like they don't understand it, or like, you know what, I'm not going to own something that every 4 years goes down 50%.
look, every asset has unique things about it. If you're going to invest in Nvidia, you better understand something about the fundamentals of that company. And we just try to do that as best we can and simplify it as best we can at VanEck.
All right, well, sit tight because you mentioned Nvidia. I want to ask you about Oracle in a second. We actually have some breaking news now. Sit tight, Jan. On Nvidia, Christina Partsinevelos joining us with this news alert.
Yeah, there are reports coming from Bloomberg that people close to the president, as well as President Trump, were discussing possibly giving the green light to Nvidia to sell H200 chips to China. Recall, and this is where it gets a little confusing, that Nvidia originally had H20 chips for China. These are China-specific chips. This latest story is saying that Trump is considering Nvidia selling even more advanced chips that have more memory, but are slightly older, from 2023. Nvidia has just responded with a statement saying, quote, the regulatory landscape does not allow us to offer a competitive data center GPU in China, leaving that massive market to our rapidly growing foreign competitors. Recall that Jensen Huang in the past has said that this market is worth about $50 billion. And this past quarter, the earnings report was very recently, we learned that they only sold about $50 million worth of the H20 chips. These are the chips that did have the green light that were geared specifically for China. So now this report is talking about an even more advanced chip that is not specific for China. It's called the H200. It was made in 2023, so it is slightly older. If I were to just speak on behalf of sources and stuff, the goal for Nvidia is not to sell older chips. They want to get their Blackwell iterations into China. So this is almost like an olive branch from President Trump saying, hey, I'll let you sell an older but more advanced chip to China. We'll see if that actually happens, though.
You ever go to the grocery store, Christina, and like there's bread and the bread expires tomorrow and it's 50% off because tomorrow it becomes stale? This feels like that. The alternate headline would be White House considers letting Nvidia dump old inventory on China. Is that fair?
That is very fair. That is very fair.
See, this is what I do. This is why I'm me. Christina Partsinevelos with the breaking news on the H200. When we get to the Blackwell chip, that's going to be the news. Christina, thank you very much. Appreciate that. Let's go back because Jan Van Eck, the SMH ETF, I don't know if you've heard about this ETF, semiconductors. Oh, it's a Van Eck. It's actually owned by you guys. You put it together. What's your take? I was being a little tongue-in-cheek there because I know Christina rolls with it on the NVIDIA news. 2-year-old chips, is that news?
No, I think it's not news. And I think Jensen Huang is trying to sell chips into China. I don't think China wants them, right? So I think it's been this tension. He's been very clear on his earnings calls that their projected earnings do not include China in those numbers, and I think that's a wise. When we underwrite NVIDIA, we do not add potential China demand in there. And I think most of that optionality is out of the stock. And I don't think the stock's going to react a lot.
Yeah, and the SMH headed for its worst week since April. But you got to kind of and I wish Christina was here so she could play off this a little bit more. Maybe she's still there. But these chips, because I know 2 years in like the real world is not a long time. But for semiconductors, it might as well be the Model T.
The compute cycle, he is dropping compute costs 90% a year. So he's joked that he would be happy to give away.
That's what I said.
Other customers' chips, and he would.
Christina is still there. Christina, and I know you roll with the snark, but like 2 years, it's like a dog. 7 years is 1 year. 2 years in the semiconductor, particularly the GPU cycle for NVIDIA, I got to imagine is a technological fundamental difference of eons.
Yeah, and then especially when you have Jensen, the CEO, saying that they're coming out with an annual cadence at least for their chips. But to the conversation, you were just speaking about China, 100% spot on. China doesn't want these older chips in their country. They want companies to use domestic, local chip providers. There's 3 issues that NVIDIA still has to overcome. There's a Mellanox antitrust case. So this is Mellanox was acquired by NVIDIA back in 2020, but China, for some reason now, has decided to go after NVIDIA for it. The second issue is concerns about backdoor options on chips, meaning that they can be opened somehow through software or anything like that. And then the third issue is more of an environmental issue in terms of energy use on some of these chips.
Perhaps this is called posturing from China, but these are three issues that Nvidia has to deal with directly with China. With maybe a few weeks ago, recall President Trump was speaking to reporters on his aircraft, and he even said this is between Jensen and China. They have to deal with it. So perhaps this is, like you said, the president saying, hey, we're allowing them to do this, but really it's not going to move the needle that much because China needs to say yes first. And then number two, they got to say yes to more advanced chips.
I wonder,
there's going to be a lot of backlash.
You ever see the great movie Silence of the Lambs? There's a scene where they're trying to make a deal with Hannibal Lecter, and they say, we're going to send you to Plum Island, and you get a view of the terns, birds. And he's like, oh, Plum Island, biological weapons thing. And I wonder if China's sitting back going, you're going to offer us 2-year-old NVIDIA chips, to your point. That's not what they want. They don't want to go to Plum Island.
No, of course, everybody wants the latest and greatest, but then you have the argument that from CoreWeave or Nvidia on their call is that these older chips are still valuable. They're still able to rent them out. They're still able to sell a lot of them because there's such demand across the board. So maybe that's one argument for still being able to sell the H200s into China, but it's not a strong enough argument given how many more advanced chips there are.
Final take, Jan Van Eck, Mr. Semiconductor.
I don't think the story is NVIDIA in China. The story of the week is a rotation amongst the Mag 7 or the Mag 8 with Google's Gemini coming out with a great new model and putting some heat and pressure on OpenAI. And we've seen that Meta hasn't had a great year. So it's this leapfrogging cycle with
I don't want to give too much away because Alphabet may or may not be our stock of the week at the end of the show. I'm winking. There's something in my eye. But everybody said that AI was going to kill Google search. Apparently, Google search has killed that meme. Like, that's not true. Google's the hottest stock in the Mag 7 because Gemini is rocking ever. What did people get wrong about Alphabet?
This white hot competition in the AI world right now because it's sticky and it's a scale business. So you just want as much business right now. Market share in that world is cheap. And that's why there's going to be a leapfrogging in this technology.
Like I said, may or may not be our stock of the week. We still have time to change it in 35 or 45 minutes. So Jan Van Eck, great stuff. Thanks for rolling with it, Christian.
Jeez. I don't know if that's an insane takes. Weird storylines to compare it to. Here's the truth, or at least the way that I see it. I shouldn't say the truth. Can I speak my truth? NVIDIA, the H200s would be a big upgrade from the H20s. That would be the best chip that China can get their hands on. That's a big upgrade. The Chinese, like, of course they would want Blackwell, but that hasn't ever been up for discussion. Okay. Before, whenever they were buying the H20s, they were perfectly happy buying the H20s before Trump banned them. And now he's going, okay, you know what, we'll bring them back. China says no. You know, Huawei's working on next advanced chips. We're trying to figure out our own way to produce those chips without ASML and the many needed facilities that would help design these chips. But H200s is a big upgrade from the H20s. Okay, that would be very exciting. And I do think that there could be something there. However, unlike the market, I am not getting excited, as the Van Eck CEO said. I just continue to factor in zero Chinese growth. The only thing that can come of it is upside. Expect nothing and you get something, and the stock will be positive on that news. Okay? But I'm not expecting anything. That $65 billion that we are seeing for next quarter and the continued growth into fiscal year 2027 or just next year, 2026, is going to be very real and material for NVIDIA. So I remain extremely positive. I think it's one of the best names that you can buy in the stock market. It's by far the heaviest position that I have. But yeah, the markets are not actually down all that much right now. Oh, sorry. I didn't mean to do that. Okay, the stock market is not down all that much, but in these select large tech names, there is some massive bleed-offs, and I think that it is worth pointing out. Oracle's down 44% from their peak, Palantir 30%, Meta 27%, AMD 27%, all the way down to the Broadcom only being down 15%. But still, these are huge, huge losses from their highs. Now, Oracle's a little bit of a special case that kind of ran up on some pretty strong backlog upgrades for them pushing forward a lot of the deals that OpenAI was doing with Oracle. But people started to realize, oh, okay, wait, they're extending out the amount of years. This is not going to be the same. The take rate's not going to be the same. Let's sort of, maybe sell this off. Maybe we worked a little too fast on underwriting Oracle. But yeah, regardless, I remain extremely positive on essentially all of these names. These are some of the most quality names that you can buy in the markets. Some of them more expensive than others. But still, even Palantir is going to be around for a very long time. Even Chamath said it recently. They don't really have competition. So in that case, they will do well. But if I could look to a name that's growing as fast as Oracle, or sorry, as fast as Palantir, have margins like Palantir, probably just as big of a moat, and is 1/10 the multiple, Nvidia is there for the taking. Is there still opportunity for growth? Yes. Is there still opportunity for catalysts like China sales? Yes. And maybe H200s is the way that we get into that, but we don't know just yet. Okay. An H200 deal would take Nvidia to 200 overnight. I would think that the earnings that they just put up would make them 200 overnight. So I'm done making price targets. I have a feeling of internally what I think Nvidia is worth. And it would scare some of you guys if I told you. But you can go searching through the channel. I've made videos on how I think that the stock is going to end at $250 a share. $225 to $250 by end of year. And that's really I think I was spot on. It's just the market is not giving them the multiple for what I think. And it just means that they're going to perform well next year if they can continue up that growth. Because how is the market going to price them? On a trailing basis, they're going to be the cheapest name in the Mag 7. How are we truly going to value them if they continue to put up this growth rate? It is oversold. It has to be. They're re-accelerating growth. And then for next quarter, they're guiding for re-accelerated growth without China, the second biggest geography for artificial intelligence, growing at 50% compounded annual growth rates. What are we talking about? What happens if they do open up to that $50 billion market? What if they do get the H200s into China? I don't know. I don't know. Okay. The institutions want your shares. I'm not giving it to them. By bringing it down is not how I sell. You gotta bring it way up for a guy like me to sell. I need to see some green in this portfolio for me to cash in, and even then, I'm not moving. Okay, but Fighters Destiny becoming a new member of the channel. Thank you, brother. Appreciate that. Let's go ahead and see if we can find any other additional commentary. Interactive Brokers Steve Sonak thinks that Bitcoin was the proxy trigger for this market sell-off. What the heck is this about?
We're joined now to kick things off by the aforementioned Steve Sosnick. He is chief strategist at Interactive Brokers. Steve, thanks for joining us really on short notice. I know you're very busy today. We'll keep it quick. Nvidia and its stock move certainly getting all the attention, but you flagged to us earlier today that it's possible Bitcoin and the crypto complex also help spark this big turn. Why and what specifically did you see?
Hi, Brian. To me, it was kind of uncanny. I was on the phone with someone discussing, how good the market was doing. And I said, Bitcoin is starting here to flirt with 90,000. If it breaks, I have a feeling that the S&Ps can follow. And it was uncanny. As soon as we broke 90,000, down went the NASDAQ and the S&P 500. I'm not going to say that Bitcoin is the reason that we had the big intraday reversal. Bitcoin was the proximate trigger, because I do think right now algorithmic traders are using Bitcoin as what we would call a lead. It's right now it's being used as a proxy for speculative fever. If I'm noticing it and you're noticing it, algorithms are noticing it, and so money is being allocated on this rationally or not.
Well, is money
that's where we stand.
Is money also being raised? Is Bitcoin maybe, if not a leader for stocks, is Bitcoin at least an indicator for something like liquidity, retail liquidity in the market? People have to raise money, so they sell what they can.
To a certain extent, yes. I mean, many people are up. It depends. The newer travelers are not up because we are down for the year, but we are still well above where we were before the presidential election. And also remember, a lot of the crypto complex carries a lot more leverage than stocks. Stocks, you can't lever up the same way that you can do in crypto. And so as a result, if that starts to break, it's much more, it adds a lot of fragility to the system.
This is a critical, as usual, Steve, critical aspect that you are bringing up. And I want all of our audience watching and listening to hear again what you had to say, which is this idea of leverage. It's not that you're buying a Bitcoin or selling a Bitcoin. You can leverage up 2 to 1, 3 to 1, 5 to 1, 10 to 1, or even more than 10 to 1. Can you not? And that leverage means if things go up, it's very good news. But if things go down, you've got to have that capital, have that cash and money available for you to raise. And this is the danger. I think today is very indicative of this idea of what leverage can do in the stock market.
Exactly. Leverage can be a great friend when it's going your way, but it could be a very nasty companion when it's not. And what happens particularly in a lot of cases, the idea of waiting for the margin call, for the margin department to call you up and get money from you isn't the case anymore. We at Interactive Brokers, we move very quickly, and people unfortunately do find themselves liquidated. That's the model in the crypto world. And what happens is, if you do these trades, it's great when it's working, but there's a lot of risk. There is always the balance of risk and reward. In the recent environment, people have been paid for embracing risk. In the current environment, where it's much more balanced, you've got to be much more careful about embracing leverage.
Okay. Yeah, sorry. I was every little bit I got to stop the show, or I'll put on a video and then run to the bathroom real quick. I got a freaking tiny bladder. It's crazy. And doing these 3-hour shows are just nuts. At 3 o'clock, we're expecting Trump to meet with Mamdani. I hope that they get reporters in there. Currently, it's expected to be a closed meeting, but there's been a lot of expected meetings that were supposed to be closed that ended up opening up to a small list of reporters. So we will see. I think that's quite interesting. There is, let's see what commentary is going down right now as we get a dire warning for New Yorkers. Let's take a quick look.
John Katzimatidis is a frequent guest on this program. He's a business guy. He knows New York. Are you going to leave?
I love New York. I don't want to leave. But you know what the smart thing to do is? Lighten up. Remember the old adage? Don't put all your eggs in one basket. Now, Jamie Dimon, JP Morgan, he just built a $1 zillion building, a $4 billion building. It's the most beautiful building I've ever seen. But Jamie has more employees in Texas than he does in New York. So I have a lot of businesses in New York. I have a lot of assets in New York. Lighten up.
Well, that means you take some of your assets out of New York.
Yes,
you lighten up on exposure to New York, right?
Yeah, I love New York. I'll always be here, but I don't have to be here. It's 365 days a year. And that's what people
about 185 days a year just to beat the rap.
181.
I knew it
just to not take any chances. No, but seriously, we said this before. 1% of the people pay 48% of the taxes, and if you look at the numbers, and we talked about this before, between New York and state and New York City, there's $370 billion budget. Florida, with 4 million people more, there's only 110, 120 billion. Where does the rest of the billions go?
Yeah,
At what point do you reach the screw you level?
Okay.
I said it in a nice way.
Yeah, you certainly
I
did.
used a 5-letter word instead of 4-letter word.
I'm glad you did, John. I'm glad you did. Okay, let's fast forward to the meeting this afternoon. I want President Trump to confront Mandami and say, we're not giving you taxpayer money to ruin that city. I want confrontation. What do you want?
My recommendation to the president was originally that the money should go through a monitor, like they did in the 1970s. That a monitor is appointed. Don't take. Trump loves New York.
Yeah.
Why take money away from New York? Put it into somebody you trust, person part of the Secretary of Treasury. Give him the money, and let's make sure the money is spent properly.
Oh, so then Trump and the administration would, in fact, control the money that's coming into New York.
Well, Washington has the money, and they give a lot of money to New York.
Could he do that?
So, yes, he can.
He could appoint this as a special person to monitor all this?
Absolutely. Now, the other thing is Governor Hochul. Governor Hochul has the responsibility to make sure he doesn't do anything stupid. As far as if he downsizes the police. So Rabbi Schneider's synagogue was attacked the other night with 200 protesters.
Yes, it was.
I had his daughter on my show last night, and the fact is, he had the NYPD has the strategic defense unit, or whatever they call it, and they went in and they had control over the situation. 200 protesters attacking a synagogue. Okay, but you know what part of the NYPD does Mandami want to cut down? He wants to get rid of that strategic unit.
He does?
Yes.
The very unit that controlled the riot at the synagogue the other night.
That's what he wants to do. And he said it verbally. He said it many times.
Well, you're a conservative. How are you going to
Well, there's another problem. There's another problem. The other problem is he gets to appoint the criminal judges. Now, if you appoint the wrong criminal judges, if you have the NYPD not arrest anybody, if you have the criminal judges that let everybody into let them out, and then you have a DA that doesn't prosecute anybody, are you going to have chaos in the streets of New York? And all I care about, I don't care about myself. I care about my children, my grandchildren, and everybody cares about New York. All I care about is New York has the quality of life. And he can affect the quality of life. And then you say, well, people will move out. Real estate will be worth 50% of what it's worth. You know what that means? They say, you know, people with him, with his people in the background, say, great news, I can buy it at half price.
Yeah.
If you were to think of the, like, you tell a cartoonist or something like this to draw an evil billionaire, it looks like that guy. He looks like if I pass him on the street, I'd be like, that guy owns half of Manhattan. Like, where did all the billions go? He sounds like an evil guy. I'm sure he's a great family man or whatever. I'm just, it's so crazy how much of a caricature of a billionaire he looks like, though. Yeah, I mean, it is definitely going to be interesting. Someone asked, you know, what's a Canadian's perspective of this situation in New York? I mean, to be honest, I don't know what the average Canadian is. I'm sure it's very easy for someone to come in and say, hey, you know what, I'm going to give you a bunch of money and everything like this. But honestly, I'm very much a like capitalist. You know, you bring the most value to an economy, you get the most out of it. So not a super fan of the handout situation. That's just my own opinion. And I'm perfectly okay with people not agreeing with that. But at the end of the day, this is a stock channel. If you're betting on the likes of Nvidia and Meta and Google and all of these things, like you have to realize you're betting on monopolies and companies that have unfair advantages and things like this to do better than those other companies. So, yeah, I don't know. It's kind of ingrained a little bit. Speaking of monopolies and unfair advantages, let's hear about what is happening between the likes of ChatGPT, Sam Altman's OpenAI, versus Google Gemini and their potential market share of search and LLMs in general.
Welcome back. Alphabet is the only Mag 7 stock positive on the week, and its renewed AI momentum is worrying one of Google's biggest AI rivals, according to new reporting. Deirdre Bosa has more in today's Tech Check. Tell us all about it, Dee.
This is a good one, Contessa. So according to a memo obtained by The Information, Sam Altman told his employees that he expects, quote, the vibes to be rough out there for a bit, as Google's recent progress could create some temporary economic headwinds for them. Now that line, temporary economic headwinds, it gets at this emerging narrative in the AI race, hype versus hard economics. And Google's numbers, they are first in class. Gross margin of 32%, cash reserves $112 billion, free cash flow over the last quarter, $24 billion. Now, OpenAI, on the other hand, isn't even profitable. It's burning cash fast, and it has to raise again and again just to keep pace with a company that can fund its entire AI strategy out of search profits. Put another way, if I need to, Google can weather a downturn, but the bubble bursting or even maybe deflating could be existential for Altman and OpenAI. So when you hear Google's leaders, Contessa, start talking about a bubble this week, like we have from Sundar Pichai and Demis Hassabis, you got to wonder who that really hurts and who it could help. But a very interesting change and dynamic over the last few months.
And the other interesting thing, and we had briefly touched on this yesterday, Dee, when we were talking, is that Google has a lot of experience in consumer-facing products. And so the idea that you would be able to use your AI in a way that is accessible to people, whether they're small business owners or factory workers or entrepreneurs or just, you know, my mom, that they would be able to give those products in a way that's accessible.
You're hitting at really the core of the bull thesis around Google right now, and that is the full stack. It has the distribution, the ecosystem, the chips, the models, the products. I mean, even with the Gemini 3 release this week, they didn't just release it to subscribers or to people who are looking for AI chatbots. They released it across AI mode. So that's potentially billions of users who aren't even necessarily looking for a chatbot. They're getting the power of, you know, the best model out there right now. So even your mom, who's maybe using a ChatGPT, a Gemini, I don't know if she's using a number of them. I told my mom that she has to. She might be using, you know, Gemini 3 and thinking this is the best one. And then that may be sticky because she's using Google or she's trained on Google. So certainly flexing that. And it's funny to go back to Contessa, you know, Satya Nadella's comments from not all that long ago saying that he wanted to make Google dance. They're dancing, and I think they're having fun doing it.
What the heck does that mean? Even your dumb mom is using it. Like, what? Even your mom. She barely knows how to operate a computer. I said this all the way back in July, not like it got any views or anything, but Google has advantages that no one else can even replicate. It has brand awareness. It is making money. It's got the context. It's got the cross-sell. They have every advantage that you could want as an AI company. Okay? That is such an advantage. And people continue to say, like, Elon Musk was one of the first really, really large companies to realize, like he came out and said it. He was like, you know, in the short term, and this was whenever Gemini was not doing well, he said, in the short term, Google will win. They just have all the pieces right now. We hope that XAI will end up taking that eventually. And he thinks that, you know, potentially with Tesla and all of these things, they might have advantages for real world artificial intelligence, physical AI, just because they have the most experience there. And that could absolutely be true. But Google definitely has every single advantage. And many people think in these new markets, even with full self-driving and many of these different situations, that like some company that has 100% of the market is going to be able to keep that. I honestly think Google will be the last company in the world to own a market share the way that they did in such an important market. Okay. At the end of the day, AI, like the second ChatGPT started to really take off and take market share, you think that Google and Meta and Jeff or Amazon and all these companies with unlimited cash stacks are not going to be like Meta literally did it. They said, okay, we'll just poach their best talent for hundreds of millions of dollars. Some of them $400 million pay packages if they come over. Like the checkbooks become endless, like literally signing blank checks to make sure that the future of their business remains intact. Okay. So I honestly don't think going forward we'll see any sort of domination the way that we saw search be dominated by Google. But we still are early days, so we'll see what happens in the market dynamics there. But big fan of Google, and I didn't need to see 300 in order to see it. I didn't see it early on. I didn't, because they were dropping the ball whenever they put out Bard, which was essentially 22 months ago, to now putting out Gemini 3.0. But once they switched over to Gemini, the signs were pretty clear. You can see which companies are putting out good products and, you know, see the overall trend. Okay. Let's Google is a forever hold. I mean, it is nice to have Warren Buffett on your side. That is a easy aspect to look whenever you're investing in different companies. Let's take a look at the markets. So really quickly here, S&P 500. I saw some comments saying, no, please turn back around. What are you guys doing? Why are you calling for stocks to be hurt, huh? S&P 500, 66.50 right now, up 1.8% on the day. Looks very strong. The NASDAQ, actually, let's just go to the SPY and the Qs. I just prefer that. The SPY at 664 and the Qs is the NASDAQ 100 composite up 1.8%. Let's see the big runners of the day. GPUs, OpenAI, Opendoor, Bullish. It's actually quite bullish considering what crypto is doing right now, up 9%. Dutch Bros up 9%. Caffeine for the win, I guess. Root up 8.3%. Rocket Companies up 8%. Transmedics up 7.6%. What have they been up to in the last 5 days? Yeah, I thought so. They rocketed up on Wednesday, dropped on Thursday, and back up on Friday. What a whirlwind. I hope that the traders had fun with that one. Another new member? How do I even say that? CIE. I'm not even going to try that. I don't even know what that is. Thank you so much for becoming a member, my friend. Tanner, issues about Blue Owl? What's happening with Blue Owl? Up 1.9%. What's going on with Owl? I have not read into Owl. Give me the short on that. Yeah, that's a password. Yeah. Bro accidentally put his password as his username, just typed it twice. Okay. Maybe BM&R is buying shares back if they're under MNAV, but honestly, we still don't know. We ended up seeing the quarterly release, and they showed us the updated share count for August. So yeah, I would like to see a little bit more information than that. I'm in a weird place with the name right now because we don't really know if they have been what's it called? Diluting at a bad price. Geez, I got lost there for a second. Okay. 1 cent a year divvy. Yeah, I know. I'm making money now. There was some sort of credit call issue that the CEO explained it, and it was being pitched by some to fade the credit scare play. Okay. Yeah, private credit's a weird space. I'm not necessarily playing in that anyway. But yeah. Oh, put the chat back on screen. That's been gone for a while. Thanks, guys. You're so right. Red market close? I don't think we see a red market close. I think we're a little too green right now. Maybe it does, but you need to lose 1.6% on the SPY. Qs are up 1.6%. I don't know if we fade that much growth. We're seeing one red candle here. I don't know what would cause us to sink 1.6%. Maybe Mamdani says he's running for president in 2028 or something. I don't even know if he'll be old enough. I think he is, or he would be. Yeah. Don't jinx it. Don't. Okay. Only takes one Fed member to talk. It does feel that way. The swings are crazy on some of this commentary here. The chance of a rate cut right now, 69.7%. Let me check what else. Oh, okay. Let's go through some of the stories that are a little bit more company specific really quick. Let me go through this. Robinhood, I know that the stock market is not doing so well, so they've been pushing a little bit into forecasting and prediction markets. Well, forecast that weather. What do you guys think about turning weather predictions into prediction markets? There's already products like this that exist. That Robinhood is not creating this new market, but could be quite interesting. I'm no meteorologist. I'm not going to be playing into that, but I do think that the prediction markets is going to be a very good space. I'm not a big gambler, but I'm not blind to the fact that humans have been gambling. Like everyone says, the oldest profession. We all know what it is. I don't have to say it, but gambling would be up there. Okay. Would definitely believe in that. Weather is rigged. Okay. Shopify, not a big name that you guys follow, but it's commerce in general. Integrating and selling in ChatGPT is now live. Merchants like Glossier, Spanx, and Skims are now going to be the first to launch out, with many more rolling out very soon on ChatGPT. Purchasing directly through ChatGPT, and guess what? PayPal will also be a part of that, actually allowing for you to check out with PayPal through the ChatGPT app. So, gotta love that. Let's see what else. Oh, you know what? I actually saw this tweet. The big shout out to Brad Freeman, the stock market nerd. I love this sort of take, and I honestly think that you guys need to follow more people that have some level heads on their shoulders. The amount of complaining about scams and manipulations for names that have given up fractions of several 100% moves in a year is silly. There's no puppet master that makes the stocks that you own go down. Anyway, I think that, like he said here, stretched multiples sometimes stop stretching and they take breathers. Even for names like Palantir, for example, multiples got extremely stretched. Now we're seeing that come down a little bit, but until that they guide or come out with some preliminary earnings or something along these lines that suggests that government sales or commercial sales are going down, the thing that made you like Palantir at 190 should make you love Palantir at 145 or 147 or whatever it went down to. So in this game, I've never promoted short-term trading. I've never promoted margin or options. I'm promoting buying stocks that you love and believe in long-term. And that could be Palantir as well. It dropped down as low today as 147. Yeah. And sometimes if that means that BMNR is too speculative, I honestly agree. The 1 cent dividend and the almost non-existing net income is potentially not enough for some investors, especially not for a very large position in some portfolios. And that should lead you to believe in names like Nvidia, Meta, Microsoft, Google, whatever. So I think while markets are going down, there is a buy the dip opportunity, but there's also a buy the dip in very quality names. Okay. I think just like trading, diversification of how you trade is equally important. Well, yes, I do also, by the way, I am holding BMNR. I've not changed my position in BMNR. It's just people are calling it a scam or something like this. Like, point to the scam. People think that whenever the stock falls, that like somehow that's going into Tom Lee's pocket. Those are secondary shares. He has no part in it. So, yeah, the only beneficiaries of what Tom Lee's dilution is the people who are wanting to sell Ethereum as a willing seller to a willing buyer. They continue to stack Ethereum. It's fine. Okay. Let's take a look really quickly at Nvidia. Is there anything changing on? Yeah, look at that, man. H200 potential sales. That was from Trump and their internal team, not eternal. Trump's eternal team. And then, half of those gains have basically sold off. And honestly, I wouldn't even believe in it anyway. Like, until Jensen comes out and said, hey, you know what? We've started selling H200s into China. It's not real. I would like to believe in it, but this is the same sort of, commentary from the Trump administration or, on the communications from the Chinese side that's happened probably 4 times now. Nuts. My average on BMNR is 40. It could be worse. Hey, I mean, you got a higher average than me. Or, sorry, you have a lower average than me. I was trying to, give you a compliment. I ended up just insulting you. No, I do have a higher average than you. Okay. Yeah, they have been playing this card, and it's either that, they're open to sell H20s, and then China says, no, thanks, we're going to build it ourselves. And then Chinese companies come out and say, hey, we want the chips. And then the CCP comes in and says, yeah, too bad. It's constant. However, I do think that this is real too. It's so weird. Like, even though we're not talking about rate cuts as much anymore, and if there's a growing chance that we do not see rate cuts, why aren't we talking about quantitative tightening stopping? That's ended now. That should be massive news, and it sort of was like a flash in the pan for the day. We're not getting QE or anything, but still, that is big news, and it's just completely evaporated. So, yeah. Okay. The Friday fake out. You enjoy the live streams during this time slot? It is a good one. We definitely catch the news at a good time. We ended up getting to see a couple of live streams happening, the power lunch and these sort of things. Let's check in on what is happening. They're talking about the Warner Brothers Discovery bidding war. Let's see.
AT&T bought Time Warner, it was a disaster. AOL bought Time Warner, it was a disaster. Warner Media and Discovery came together. That has not been a success in the publicly traded markets. But this time it will work when Paramount buys Warner Brothers Discovery.
Do I sense, just a touch of cynicism?
Look,
like a drizzle of snide.
I'm here to be proven wrong, as always.
Well, we're going to wait and see. When do those bids due?
The bids are in, and an announced winner and an announced direction around Christmas.
Fantastic. I feel like I kind of set you up.
First round bids are in. There will be another round of final round bids.
There you go. Alex Sherman, appreciate it. Thank you very much. Quick check now on the markets, folks. Heck of a rebound here. We got to show you there. Look at that. All the markets are up, and pay attention to the very bottom. The Russell 2000, the small cap stocks, the Russell's up 3.2%. And that, my friends, one of the biggest gains of the year. Heck, and maybe the biggest gain of the year. I'll spend the commercial break looking through the data, and after the break, we got our stock of the week. Stick around.
I would like to hear their commentary. We will stick around for their Google commentary if that's what it's going to be. So I am excited about that. But I've always been interested in if there's going to be some large acquisition from Netflix or how they expand their business over time. I'm not currently in that name. I found it very hard. I've always thought that they should get into more creator spaces. Obviously, they've gone to some YouTubers to create content on Netflix, but it is such a profitable game what YouTube is doing, and I'm not sure if I believe in the business model of Netflix still to this day. Yeah, Netflix live streaming, Netflix sports is definitely very exciting. Those things have been very cool expansions. But yeah, and sorry, RS, you are correct. Nvidia has just lost all of its move on the H200 internal memos from the Trump team. It's gone. Crazy, which I bet you has put some pressure on the Qs. The SPY still up 1.3%, but yeah, fading some of that growth as we were up to 664 just a little bit earlier ago. Trump played the card too early. He hasn't even played it. These are rumors. We're talking about rumors here. So yeah. I was subscribed to Netflix's DVDs until they mailed out their final discs last year. Now I have no subscription at all. Were you watching the actual DVDs? What is this application you're using? I don't even want to tell you. I've got no faith in this company. Don't do as I do. This platform freaking sucks. And only because they continue to switch the stocks on the ones that I'm looking at. They have some sort of randomizer thing that just ends up making me look at like Wells Fargo halfway through talking about Nvidia. I want to smash my computer. Okay. Can we talk about Better real quick? And I'm not trying to cause any heat here, but this is also a thing that we needed to bleed out of this market cycle is these commentators that come in and saying, hey, you know what? And I could be a bullish guy. Okay. I can be bullish. I've called for some extreme things on Nvidia. They are the number one company in the world and the most profitable. Like, of course I'm going to be excited about that. But whenever there's some people that come out and start talking about how these are 100x public stock positions and doing that multiple times, you see it all the time. These unbelievable price targets that needed to get flushed out. Companies that barely make any money, that have barely any volume, that are just getting their businesses started on essentially an idea. Get them out. Do you stream daily on Market Open? No, I am from noon to 3-ish. I might go a little bit longer today, depending on if Trump and Mamdani end up having a public sort of viewing of their meet. I would like to see that, but yeah, we'll see. Right now, the commentary is outside of the White House right now. They're not actually in. I'll keep an eye on that. Okay. Great show. Thanks, man. Stock Bull 101. Appreciate you. Okay, so we're hoping to see the Mamdani Trump meeting. Whether or not it's bullish or not for markets, I think that's going to be entertainment central. So I really do want to see that. Stock, like, look at this. Why am I looking at ACWI? Okay. I hope to see that. I hope to see the power lunches, a stock of the day, which I think they said is going to be Google. I'd love to hear, their bullish take on Google, if that's, and honestly, what it is, it's just institutions following what I've been, what retail has been saying for a very long time. That this company is going to turn around. They have all the products and tools, and TPUs are doing very well. Sundar kind of gained a lot of respect back from me. In fact, like I find the speed in which they regrew last quarter in every single one of their major segments, YouTube, search, subscription devices, and cloud all reaccelerated last year or quarter over quarter, but on a year over year basis. That is very exciting. Why don't you stop using it? It's just a matter of me having to go through and replug all these stocks into my watch list onto Webull or something like that. Really, the only two options that I guess there's more options now, but yeah. Let's take a look to see if Google is going to be covered on CNBC as their stock of the year, which I mean, it probably is, but I just hope that it's truly their take and not just whatever Warren Buffett is going to pour their money into. They're calling the next best stock. That's a little weak of a take, in my opinion. Okay. Any updates from Trump? 1 minute out, still no. Nothing here. Okay. If they can get in, that would be crazy. Obviously, there will be some sort of report or commentary afterwards from both sides. But yeah. Let's have a look at Google.
In regards to Google, the reason you're seeing strength is twofold. One, it's the strength of the TPUs, their own individual chips in their Gemini 3 model, really showing that they can do this on their own without possibly the help of Nvidia. And the second maybe is more inside baseball, the fact that there was an internal leak from OpenAI talking about the fact that Google is a real threat to OpenAI and the fact that Google has more access to a lot of infrastructure and chips, et cetera. But overall, it's a nice reversal that we're seeing in Google. You wanted to talk chips, though, Nvidia. We talked about it earlier in the show. The fact that President Trump, and I can confirm that is true, was considering sending more advanced chips to China or allowing Nvidia to send more advanced chips to China. And that's helping the sector as well.
There you go. Christina, I know we'll see more of you in the 3 o'clock hour. I'll see everybody at 4 p.m. Closing bell starts right now.
And welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with a relief rally to end a choppy week as the bears take a breather and investors attempt to rotate away from danger and some.
Okay. I don't care. But I do hope for some more upside on Google. I think we will get it. I think that the upside in the short term is actually higher on Meta. I mean, do you guys think that we end up heading lower on Meta before we head higher? I definitely could see something like that happening, that we end up seeing another quarter of increased CapEx. Nothing has changed. Like the sentiment stays the exact same, that spending is going to increase and everything like that. But who knows? Who knows? Okay. I don't know if we're going to be getting into the White House here in a sec. It might not be, they might not be letting people in. Shame. Okay. They need to make Google agents for They will, though. Like, this is the thing about AI. There'll be everything. Every problem will try to be solved by AI. Might not always be the most useful case, but that is going to be what happens. There's going to be meta agents for their creators and shorts creators, and they're going to be summarizing all the comments and complaints, and there's thousands of comments here that I can't read. But if Google told me, like, hey, there was 5 comments that were all about the exact same topic, maybe you need to address this. So, stuff like this would help my job, would help make the stream a lot better, would help see an inflow of new news. But yeah. But it's a Friday night. Friday near the close of the market. There's not going to be a ton of new news right now. But if we don't get into the White House, ladies and gentlemen, I do really appreciate all of you guys showing up. It's been an incredible start to this new series of doing these mid-market streams. Just wanted to say thank you so much for, the attention, the care, the helping me cover this. I see a lot of you guys tell me what you guys would like to see next, or DMing me different things that you guys would want me to cover. Do really appreciate it. Seriously. It does look like we're going to close green. Obviously, we have an hour to the end of the day. It doesn't have to close green. There could be something, but if I could just say, lastly, and I always do, but just patient heads prevail. Don't freak out. If the market is freaking you out too much and you're beginning to have trouble sleeping or something like this is real money we're talking about. Some people have hundreds of thousands, millions of dollars in the market. It can be a lot of stress to put on high beta names that have a lot of volatility. So think about your portfolio allocation in general. Think about how you can construct a portfolio to increase growth while also being able to sleep fine if it does go down, meaning maybe that's not in quantum and extremely speculative names, but ones that can still be, very forward looking, but also have great businesses in case those things don't come to fruition, right? If Meta was just a bet on the metaverse and glasses and llama and stuff like this, I would not be in it. The fact that it's backed by multiple billions of users that are increasing the amount that they're spending on those channels, and then also the monetization of those users continue to climb, is what allows them to be essentially a research company for all of those other potential projects. Google's done it for a very long time. Meta is sort of in a great phase. So, yeah. Iron Stomach says, Joy Luna, 100%. Iron Stomach. As I say this, we are seeing red candles going in. Gosh, I'm going to be sick. No, I'm kidding. I think the Mamdani meeting is live. I'm staring at it right now. There's nothing but the front door. So they could very much be meeting, but we do not have internal access right now. Yeah. Yep. But honestly, you're for the newer investors, I think one of the reasons why I'm not I'm not freaking out is because I feel like I've seen this before. It happens. Been investing just a little over 10 years now. It's going to happen again. You're going to see wild things that you cannot describe or predict in markets. It's just the nature of the business. And your job is to make sure that you're not, holding the bag whenever the quote unquote feces hits the fan. No one ever says that. No one ever says feces hits the fan. I'm trying to PG it down for you guys. But yeah, this is a great lesson, honestly. And as long as you didn't, margin up and increase your leverage, I know it sucks to say that, but you'll be better positioned next time that this happens. And as long as, and hopefully a lot of people have potentially already found or felt that this is a rigged game, as long as you continue to come back, markets are the greatest wealth generator in the world. But you are rotating the money of the impatient to the patient. And one other thing I'd like to say about the markets, this will be my last thing. I apologize, but this is actually really important. Unlike prediction markets, where prediction markets is two individuals, one casino in the center that takes a small cut, and there's no net gains. One person wins, one person wins, one person loses, and then that continues on that cycle. The markets are actually not that. Many people think that, but it's not true. through buybacks and dividends, through the real shareholder yield, the high majority of all the gains that have been made in the stock market are actually produced by the earnings of the companies that we're holding. I think it's something like 85% or something of the money that is in markets was produced by the companies that are in those markets. Okay. So it's not even the people who are losing and winning, the overall wealth in markets continues to climb up. So, it's almost like we're on a trampoline that's placed on an escalator. We're going up. Sometimes it doesn't feel like it because the bounces of the trampoline are so much faster than the escalator. But in the grand scheme, the trend is up and to the right. So I continue to hold. I'm going to be here for a long time, going through the daily motions with you guys, celebrating the wins, essentially putting Band-Aids on the losses. But I really do appreciate you guys being here. It's been a ton of fun. And once again, I'll see you guys next week at noon. If you guys want to see that, hit the subscribe button down below. Thank you all so much for watching. Really do appreciate your time. Bye for now.